call. Commissioner Morocco.
Present.
Commissioner Chun.
Here.
Commissioner Solomon.
Here.
Commissioner Nguyen.
Here.
Commissioner Esser.
Here.
Commissioner Samples.
Here.
Chair Johnson.
Here. Thank you. Warren, can you lead us in the salute to the flag? Please.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. So we note we do have a blue folder item, which is the city treasurer's report, which will come up in a bit. Thank you. Do we need an approval of the consent calendar? Or we note the consent calendar?
Chair, we probably should receive and file the blue folder item.
Okay. Do we have a motion to receive and file the blue folder item, the treasurer's report?
I motion. Yeah.
Okay. I'll second then.
All in favor?
Aye.
Thank you.
And then also the approval of the order of agenda. You probably should have a motion on that as well.
Okay. Any comments?
Oh, sorry, beg your pardon.
Comments on the order of the agenda? Motion to approve?
Motion to approve the agenda.
Second.
Second.
Favor?
Aye.
Aye.
Approved. Okay. So is there is there an action on item number 4?
Let's see, the next item would be the consent calendar. Approval of items 4 and 5.
Okay, so do we have a motion to approve item 4?
I approve. Motion.
Motion. Second?
Second.
All in favor?
Aye.
Okay. Also, any comments on the meeting minutes from the prior meeting? Okay, no comments. Motion to receive and file
I
prior
move.
minutes. All in favor?
Aye.
Okay. Nothing excluded. I note. Public participation, anyone?
This would be on non-agenda items. Okay.
Hi,
Good evening.
my name is Rebecca James. I live in District 2.
Welcome.
And I'm here tonight because I've been noticing what I consider to be a horrible occurrence at most of our city council meetings. One of the things that I've noticed is that we continually are approving a whole range of services that are being rendered by contractors. And they, I'm sure, are asked for in replacement of those services being able to be provided by city staff. In some cases, that may make a great deal of sense. And in fact, it might be so costly that to have those skills present in staff members might be too expensive for our city budget. But oftentimes, I think what happens as time goes on is more and more things get pushed off to consultants. Staff salaries continue to rise, and responsibilities are filtered off to consultants. And so it becomes a question of why are we increasing the salaries that are associated with staff positions when in fact much of the work is being done by consultants. So I have been thinking about this a great deal and have been thinking that really maybe what we need as a city is to do some zero-based budgeting. That maybe we should be looking at our budget and looking at every position, every responsibility, and even maybe at the task level if necessary. And perhaps that could be supported with some work using ONET Online, which is a great database of job descriptions, responsibilities, tasks, talents that are needed, things like that. So I'm saying this because I hear more and more residents stating that the response they receive when they call the city about a wide range of topics that we discuss, the answer is in the category of they don't know who they'll get on the phone. One day they talk to an employee and that person is customer centric. They're very responsive. They're actually pleasant to speak to. And then the next time they call and talk to that exact same person, and this happens over and over and over again, if for say for instance, you use community services quite a bit, you might call there quite often. The next time they call, they get someone who hates their job, hates the people, i.e. residents, for whom they work. And residents are they're starting to really rile us because we feel that we are paying these people, that they have a responsibility, they should take pride in their work, and we should insist on a customer care environment in our city. So among staff, we really just feel that that's very important. I know my time. Was the clock set?
Yes.
Okay. So I'm sorry. I've exceeded my time. Thank you.
Thank you for your comments. Any other public comments or participation? So those will be noted, and we appreciate your comments. Thank you. No old business. For new business, it is the time of the year that we will elect a new chair and vice chairperson. So this will apparently be my last meeting as chair. I'd like to thank everybody. It's been a good experience. So probably we can look to some of the members of the commission who have perhaps not already served as chair and have been through the meetings and understand the order of operation and how things go. And I guess we would be looking for a nomination for a chairperson. If it's appropriate for the outgoing chair to make a nomination.
Sure.
I would offer up Warren Chun as the chair for the upcoming year. Do we take a second on that? Anyone?
I was also thinking of Warren as chair, and I was also thinking of Dan as vice chair. In the spirit of the commission, we rotate the chair and vice chair to give everybody an opportunity. Thank you, Commissioner Johnson.
I agree with your second and your nomination for the vice chair. So I guess we can take that to, are there any other comments or?
Is the typical procedure that you've engaged in where you have a person who has not served as chairman or vice chairman, and you base it on a seniority and you're rotating folks in that way?
So I don't know that it's on seniority, as our terms come and go. For example, Min and I are coming into our 4th year. So we are senior members. Min has served as chair. I don't believe it is seniority. I think it is appropriate that it is someone who has sat through a season of meetings, and as you can see, the responses for items are not entirely always clear for some of the more obscure ones. So it is important to have some experience in the operation of the meeting, so Warren, having been here for a while, I think is a good nominee. And other than that, you could repeat. It's good for people to have an opportunity to act as chair if they wish to. I would be more than happy to do that. It's a fun experience, but I'm happy to pass the torch to Mr. Chun, Commissioner Chun.
Okay.
Any other comments?
And who was the nomination again for vice chair? I'm sorry, I didn't catch that.
It is for Morocco.
Oh, yes, okay.
So, all in favor?
Aye.
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 Okay. So congratulations, chair and co-chair. So
Vice chair.
we look forward to your service in the upcoming year. Okay, so item 7 is a resolution of the Budget and Finance Commission of the City of Redondo Beach, amending our bylaws regarding the time of the meetings. So there's a change coming up on our meeting schedule, or we're adopting the new schedule?
Scheduled for 2018.
Okay. Is that here in our package? Okay. You mind? Okay, any comments on the schedule, conflicts? Motion to receive schedule for 2018?
Or so move.
Second?
Second.
All in favor?
Aye.
Approved. Or received. Thank you, Bernie. So, Mr. Treasurer, or Neil, we're ready for your report.
All right, well, good evening, everybody. We're all spending time away from our families and from the playoff game that will determine who plays the Dodgers this weekend. I am Stephen Deals, your city treasurer, and to my left is Nilesh Mehta, and he is your chief deputy treasurer. And he's here to give the bulk of the treasurer's report. At the last quarterly report, there was a request to see how the fees were working with our consultant, and we did bring those along to show you. So I'll be presenting that portion to you.
So I'll be going over just a quick summary of the first quarter of 17-18 fiscal year. Did you want to go over the investment objective?
No, you go.
Okay. One of the first things that we like to do is just do a quick overview of the investment reporting guidelines. It's important to remember that the money is the community's and not yours, so we must all act accordingly and make sure that the public funds are managed according to safety, liquidity, and yield, and in that specific order. So as investment managers, it is our objective to earn a reasonable rate of return while preserving capital in the overall portfolio. So just keep in mind that as we're going over this, just want to make sure that the policies, if they're make sure that they're clear, they're appropriate, and they're followed properly, and oversight is adequate. And if none of these apply, then please let us know. Several questions to ask while we're going over this is, do you review the investment policy? So as we're presenting it to you, just make sure that we're able to properly present it to you. Do you understand the city's investment program? Do you receive and review periodic investment reports? Are they clear, concise? Are they readable? And do you fully understand them? So just a quick overview of the first quarter's investment performance. So what we have done is we have separated the investment funds from the general balance. So the general balance is $10,347,480, and then it's just a breakdown of the different funds that we have the money invested in. There's $9 million in local agency investment fund, which is the LAIF fund. Fortunately, as you can see, it's earning quite a bit higher than it has been in the past. It's 1.07%. So if you compare it to the last fiscal year, first quarter, it was only earning 0.63, which is on the second page of the PowerPoint presentation. Federal agency issues just over $45 million. Corporate medium-term notes just under $12 million. Bank CDs were just under $3 million. Treasuries just about $12 million. with a total investment portfolio of 81 million. The weighted average maturity is 1.73 years, and the effective rate of return on the portfolio is 1.34%. And this is compared to the 2-year benchmark of 1.19%. And the interest earned year to date, so since it's the first quarter, is just under 300,000. And what happens is 2/3 of that goes directly as a contribution to the general fund. So we have made a contribution into the general fund of 191,556.
So Neil,
Yes.
the improvement in our yields, is that a result of the Fed increases in short-term rates?
Right, just a general increase in the interest rate as well as the various changes we have made in the purchases of higher yielding assets.
We just began the implementation of our new policy, which you guys reviewed and approved. It was approved by the city council, and we've made some trades that will be reflected in the next quarterly report, and you'll see some improved results in the yield there as well.
Good, thank you.
Do you expect the average weighted maturity to remain the same, reduced a little bit, go higher with the trades you made?
It should go up a little. We're trying to roll down the curve a little bit right now. Roll out on the curve.
The following slide is just a general performance overview of the last fiscal year. As you can see, we beat our estimates for the general fund contribution for last fiscal year. We had it at approximately 550,000. We ended up with a general fund contribution of 632,000. So we're expecting hopefully similar or better returns for this fiscal year. And then this is just a chart of the 2015-2016 fiscal year performance. And as you can see, the general fund contribution for that year was 531,000. So it's just been a steady increase in overall performance of our portfolio.
And if you want to compare quarter to quarter, first quarter of that year was 130,000 general fund contribution, as opposed to 191,000. So we bettered that by 60,000 this year.
Now, excuse me, I'm the new guy here. Who establishes the benchmark, and are you satisfied with the benchmark that you're using and the yield that you're getting?
Yes, the yields are improving. We're under very strict guidelines. You'll notice over the year how all of this works. What we'll do after this, we're giving you like the standard presentation. I'm going to go back and go over the actual report we just gave you because I know you just got it. And then you'll know what to look for going forward. The benchmark is a good one, although we can design one, but it seems to have been something that's a good benchmark to follow over the years. It's also the one that's recommended by our financial advisor, and it has been approved by this board and as well as the city council.
Okay, I'm just curious because my financial advisor comes up with 1 million benchmarks every year, and they're all over the place. I was just wondering how you decided this is a good benchmark and how you're evaluating performance against it. Is there a better benchmark?
If there were, we would be using it. I would be recommending it. We use this one because it's virtually the no-risk one, and since it's the Treasury benchmark. So with risk and with moving out the curve, you earn a little higher yield, and that's what we're getting. Some cities have virtually no plan at all, and they put all of their money in LAIF. And some cities have much more aggressive investment policies, still within the state guidelines. But this seems to work for us. Again, we go back to the original statement, which was the generally accepted objectives in managing public funds in order are safety, liquidity, and then yield.
Well, I noticed in the material that you have, very few of our assets are invested in CDs, and jumbo CDs are paying higher interest rates than this. And they're about as secure as you can get, so that's why I'm
Well,
curious.
they're actually not as secure as you can get, so that's why I'm Well,
curious.
they're actually not as secure as you can get, and we have limits as to how much we can put in any investment type. I'll show you, if you want to meet offline, I'll be happy to go through the policy with you in more detail and show you what some of those limits are. What the quarterly report is a reflection of the investment policy, and the policy is what dictates our investments. And so there'll be another slide coming up demonstrating that we're within the policy guidelines.
Okay, thank you.
This chart just goes over a quick overview of the historical book value going back to July 2009. It's been a steady increase, upswing. Right now, we are currently at a total portfolio of just under 95 million. So there has been a decrease, as you can see from that latest drop, and that is because we had a contribution into our PERS retirement fund of 8.1 million, and that was done to save the city just about 200,000 in total cost for employee retirement accounts. So this chart goes over the sector allocation based on the different funds that we have, and I will go over that with you. So in agencies, we have 55.6%, which is that top bar right there. In LAIF, we have 11.1%. In CDs, we have 3.7%. And in corporate notes, we have 14.8%. So that's the breakdown of the sector allocation.
Question, Niels. Are within the agencies are to be announced securities allowed? They are actually agency bonds. They're kind of like pre-IPOs. Are they allowed in the guidelines?
I'm sorry, which ones?
Within agency securities, there are securities called to be announced agencies.
Okay.
They're pre-IPOs. So are those allowed in our guidelines, or have they been traded in our portfolio?
I don't believe so.
I don't know what that is, to be honest with you. To be announced?
Yeah.
Maybe you,
They're already issued?
They are pre-IPO.
oh,
So
but they're agencies.
they are agencies, but they are pre-IPO. So I just want to find out if those are allowed or in our guidelines.
I can check. I don't know. That's not something that's ever been recommended that I even know that we've ever invested in. But I can check and report back to you by email if you like.
Yeah, that'd be a good thing to follow up on.
Okay, let me write that down.
I also have a question regarding LAIF. What's the reason behind, I guess, the decrease in position relative to the whole portfolio? Just the blue line drops.
So LAIF is a liquid.
Doesn't yield anything,
I'm sorry?
because it doesn't yield anything.
Well, it yields 1%, which is actually quite high right now. It was down as low as 0.25%. But what you're looking at is basically a snapshot at the end of the quarter. So LAIF is very liquid, and so we take money, rather than leaving it in our general fund account, which that earns very little. So we put the money in LAIF, and then we take it out as we need it. So there are regular cash flow ebbs and flows throughout the year, and then we use LAIF to basically store the money as opposed to having to liquidate investments in order to meet our cash flow needs. Okay, wait a second. I want to go back to writing down this other question. They're pre-IP. What was the name of those again?
Your consultant should know what it is. It's a TBA.
A TBA.
To be announced.
Agency.
Yeah, it's basically an IPO of an agency bond.
Okay, and you want to know if they're in our policy. Okay, I will find out. All right.
When we deposited 8.1 million into the PERS account, when we had the budget come out, we made a number of first-time or one-time expenditures, rather, for certain items. And so are we also rehabilitating that emergency fund, that reserve fund, as part of that 8.1 million?
No, this isn't to our own PERS reserve fund. This payment was actually to PERS.
I understand that, but if we're making payments to PERS and we're going to make an $8.1 million payment, I guess my question better put is, how are we or when are we going to rehabilitate that reserve fund?
That'll come up at probably with the year-end review or mid-year budget or next year budget.
In response to that, it was like last time we were reviewing this, the budget, like last May, they said basically that's kind of like a slush fund. So if they have the funds, they'll put it in there in the reserve, in the general fund. And if they don't, then that's where they draw from.
Okay.
So it's like a slush fund.
Thank you. Thank you, Marty.
So this is going back to our policy compliance. And so for the quarter, we have a snapshot of whether we met, we were compliant with all the policy that was in place. So let me just go over a little detailed summary of exactly what the policy states. And as you can see from the chart, we are in compliance with all of the stated policies. Weighted average maturity, it states that it must be between 1.5 and 2.5 years, so we're currently at 1.73 years. Liquidity less than a year, at least 25% of the portfolio must have maturities of 1 year or less. So currently we are at 37.3%. As far as liquidity of less than 3 years, it states that at least 50% of the portfolio must have maturities of 3 years or less. We're currently at 77.8%. U.S. Treasuries, no limit. U.S. federal agencies, no limit. Bankers acceptance.
So Neil, the U.S. agencies, the TBAs that I talked about, that would fall under that category right there. So based on these guidelines, they are allowable. So based on these guidelines right there.
Okay. So time deposits, no limit. We're currently negotiable CDs. We're currently at 3.7%. Sector limit is 30%. Commercial paper, 25% limit. We don't currently have any of that. Local agency investment fund, no more than 50 million. And we're currently at 11.1% of the portfolio. So we're compliant with that. Corporate medium-term notes, sector limit 30%. We're currently at 14.8%. Money market funds, sector limit 15%. We're not invested in that. Guaranteed investment contracts, CDs, collateralized bank deposits, and supernaturals. We're not investing in that currently. And this is just a quick overview of the trading activity for the quarter. For the quarter, we had 1 purchase, and we had a total of 6 redemptions.
Question, Niels. Recently, they changed the policy that that they can actually, the consultant can actually trade. So, based on the quarter, they didn't do any trading. It's aside from, sales versus maturity. So they have done no sales then.
Yeah, not in this. Remember, this took place primarily before that a policy was approved. We just did some of those, some redemptions and purchases. For the first time. I'm not sure if it fell into...
It's for this following.
It fell into this quarter.
Right.
So it fell into this quarter. So that's what I was alluding to earlier. So you'll see that next quarter. But yes, we did do that.
Thank you.
Did you want to go over the...
Okay, so thank you. So this is the PowerPoint presentation that you would get with the typical report, assuming you got it with enough time to review. Let's go ahead and go through the report format itself. We'll go through the actual report. So you have the administrative report. It was in your blue folder. Looks like this. Do you have it, Mel? You got it, okay. All right, so we set this up with an executive summary. and then we just tell you what, you know, the basic parts of the report are. So we give you a little narrative up front. On page 2, you can see we give you the quarter-over-quarter positions and the composition of the portfolio. The quarter-over-quarter, they might be a little bit out of place here unless my pagination is wrong, but they begin here. So I've got these charts. So this is new since I became treasurer. You actually can see the performance over the years, and you can see going back, we've got 2017, 16, 17 that just ended. We've got 15, 16, 14, 15, and 13, 14. So you can actually see how the performance has been over the last 4 years. And then we've got another chart where you can see our comparison of total cash and investments. And this is where I tell you basically, you know, you're a board overseeing basically a $100 million operation, and you can see all that here. That's this chart.
Page 5.
Page 6.
And that goes back to 2013, yeah, 13, 14. And that's another comparative review. We do show you on the next page, page 6, the cash balances that are in all of our accounts. So when I was on the city council and I received quarterly reports, I really didn't have a handle on all the money that was in all of our accounts. And so we now show that to you. So we've improved transparency there. And then if you're curious what those accounts are, the descriptions of those accounts are on the following pages. We do have some money in LAIF and some various other accounts, so the RDA, the Financing Authority, and so on. This is on page 9. And we show you the current balances in LAIF of all of our accounts in LAIF on page 9. That's what that little chart is. We also give you a snapshot of our bond financing accounts. That's money comes in and out of those accounts throughout the year as we operate the bonds. So we just show you what's going on there. That's not something that was seen before. Then we finally give you the trading activity, followed by the amount of revenue we've generated for the general fund on page 10. And then we follow up with the investment reporting guidelines, which we give you virtually every report. As you can see, there's some degree of turnover on the various boards that we report to, so we always give reminders about what our investment guidelines are and what your role is as a board. So that's it in a nutshell. It's not a long read. I did have an email exchange with Eugene about trying to get you these reports earlier. You did just approve another very aggressive calendar. For example, you have a meeting on the 11th of January when the treasurer's first quarter report would be delivered to you. We will not be able to get that to you before the meeting. We don't get our data until into the first and second week following the quarter. So we can only get these to you just in time. This discussion has occurred in the past with this board, and they've decided they prefer to get the information sooner rather than later. Otherwise, we can schedule these quarterly reports at the following monthly meeting, and then you could have more time to look at it. We also, in these reports, are the quarterly reports that come from our investment advisor, and these are very nice to review. So you get some economic information and some very nice graphics about our positions. Okay, and then speaking of our investment advisor, there was a request last meeting to understand what our trade credits were and how they worked. And so we did include in the back of your report, there's this matrix, very tiny, but it's an Excel printout. Chance to get to that. Everybody there? Okay. So the way our investment advisor is compensated is through the contract to pay him, or pay his firm, basically $1,500 a month. Over the last, since 2013, so the last several years, much of that fee has been offset by trade credits. So if he makes a trade that earns interest, it actually, or earns a fee, it actually is charged to our account, and we're credited that amount. So if you look down at the very bottom under totals, you'll see that of the $65,000 that we've owed him over the last several years, $39,000 of that was paid for in trade credits, so more than half. So we've saved a tremendous amount of money using the trade credits, and that's the detail of virtually every single trade credit we've received.
So it's a flat fee of $1,500 per month that's offset by
Trade,
the cost per trade,
if they get a fee.
if they get a fee for it.
Yes. Yeah, and so, and that doesn't happen all the time. So you can see in the right-hand column near the bottom, we haven't had many trade credits these last series of trades, but prior to that, we had quite a few.
That's
So you're
assuming,
saying last year, you got a trade credit about 30, what did you say? 39?
Well, over the life of, I'm just looking at the information that's on this whole chart here. So on the very bottom,
Oh, I see, 39,187.
right, and that's over the life of
That's the
the
credit.
relationship.
And that's been since 2013?
Correct.
When we initiated that relationship, was there a bidding process, or was it?
Oh, yeah, there was an interview process, yeah.
Okay.
Yeah, this is by far the best value of anything, and it's been tremendous. So we get great advice. We're getting an improvement in our investment portfolio yields while maintaining safety and liquidity. So, and then we're paying very little money for the opportunity.
that's assuming that the execution price is really good.
Well, you're seeing the cost and benefit of every trade. I mean, we're under very tight limits from the policy and the state guidelines, so we're not taking any risks.
Okay, but to be clear, in the last 12 months, we've received $4,700 in credits and been billed $18,000. Is that right?
If you did the math on that over the last 12 months, I believe you.
Okay.
Have we set up any policy to review our vendor every 5 years, every 3 years, every 6 years?
No. But he does come and present to this board as well as the city council once a year each.
Is there some other mechanism in place to ensure that the vendor is charging us appropriately, that there isn't something, another vendor out there that we
Well,
can
yeah,
work with?
so we attend conferences and we're members of associations and we know the other players. I've been presented to by at least one other vendor. They can't match this price. So the price is good. The question is, are you getting, it doesn't matter really what you're paying for anything in my mind, as long as you're getting the value for it. In this case, we're getting a very low price and a very high value. And I think we're paying less than we would if we were to contract with these people today.
When you have protocols that have such narrow margins, where we have to preserve capital, maximize our yield, be safe, you have the price of the trade or the management fees can be very impactful. That's why I asked the question, clearly.
You know, he was just here at the last meeting. You'll get a chance to meet him over the life of your term. It's you'll be impressed.
Thank you.
Sure. All right, well, that concludes the quarterly report. I would note on the calendar you just looked at, I know you've already approved it, but it might be better to have the city treasurer's second quarter report at your February 22nd meeting.
So I did have another question about the report, if I can, please.
Sure.
In talking about the average maturity and noticing that over the course of the last few years, the average maturity seems to be increasing. When you're talking about, as Mr. Johnson mentioned, increasing rate signaling from the Fed that they're going to continue to do that, do we put ourselves in a position with longer maturities of eroding yield?
Well, that's why we have a laddered portfolio. So things are always maturing, and we can invest those at current rates. So that is the ladder strategy. We did have, actually, we were pretty fortunate. I wouldn't say it was out of planning because I'm not that good. I'm not going to say I'm going to guess the market. I'm not going to do it. There's a whole, like a betting pool that tries to figure out what the Fed's going to do. But when you look at, this is an interesting thing. When you look at our compliance with the policy, if you can find that slide.
Yes. Well, average weighted maturities was the maximum of 2.5.
Yeah, we
and a
can't
low
go,
of 1.5.
right, we can't go very high, but what I'm getting at is at one point, we're only at, we can be down as low as 1.5 and we can be as high as 2.5 years. Sometimes, we're all in compliance here, these all say yes, but they don't always. So every once in a while, we fall out of compliance, and then we're taking actions to get back into compliance. And one of the times where one of these yeses was a no was when our weighted average maturity was down below 1.5 years. Well, at that time, we had a lot of money in LAIF, and LAIF was rising substantially, and so it worked out pretty well because the rise in LAIF was rapid, and we earned some extra money. So it just happened to work out that way.
Maybe a better question is strategic, two questions. One, is it strategic to decision on our part to increase that holding, that percentage, or was it something that just as a inertia of the marketplace and the way things were going, that it so happened that way, but we made every effort to stay in compliance?
I mean, it's a little of both. I mean, the thing is, we're structured to take advantage of a dynamic market because we have a laddered portfolio. So as things mature, we can invest them. If it doesn't look like there's good investments, then our liquidity piles up, which is what was happening in that other quarter. In addition to that, it happened to be the quarter in which we got a lot of revenue. So at that point, as soon as we found investments to store our money, essentially, we did that. But we can't do that for very long because soon we'll be out of compliance. So we can't, we can't be that strategic and play with the money too much. The policy just doesn't allow it, which I think is good. So it's a very structured policy, and we have a laddered portfolio to take advantage of a dynamic market, and that's what we've been doing. And in that case, I can tell you, it worked out well for us.
Right. Sometimes you have it where it's passively reallocated, where if you find yourself out of compliance in one sector, there's a trigger, for lack of a better way of putting it, to let you know to come back into compliance or that you're reaching the edge of compliance. So I suppose that was, part of it is something that we're actively doing, or it's something that the advisors are doing to make sure that we maintain these compliance.
We were holding money because we felt yields were going to increase, and they did. And while we were holding the money, even the short-term yields increased. But we couldn't hold it for very long because at that very same time, we had an influx of revenue
That's what we see our liquidity moved into.
Right. So then we were out of compliance with our portfolio, and we have to invest the money.
Okay.
That's just how it is.
As you said, then a combination of those two things.
Yes.
Okay, thank you.
Mr. Treasurer, you had a recommendation on, I believe it was the treasurer's second quarter report being presented. Was it at the February meeting?
Yes, I would recommend, just anticipating that, it makes the most sense. Coming back off of the holidays, the new year, having less than 2 weeks to prepare the quarterly report and get it to you with enough time for you
And
to
the
review
quarter
it.
ends at December 31, so I'm sympathetic to the holidays and both the receiving of the report.
Yeah,
Exactly. It would appear that that could be combined with your review of investment policies and principles, which comes on February 22nd as
yes,
well.
I would recommend that's probably something you want to anticipate.
So I think.
Can we motion for that?
I don't know how that works because you already voted on the calendar, but
Right.
you can maybe make a referral to staff or something like that.
I think I have another calendar issue, so when we get to referrals to staff, we will bring this, and I think having voted on it, someone could correct me on rules of order, we might be able to reopen the issue anyway.
Or
But-
bring it back another time.
Yeah, exactly. Good point. So I appreciate that because, having it early is helpful.
Yeah. And the other thing is, if we put this off, you're going to get it after we give it to the council. I look at, you guys are an advisory board, and I look at you as colleagues, so, we can use your help. You're here looking at this, and you've got expertise, so I like giving it to you before I bring it to the council. If you decide you want it later rather than sooner, then I'll be giving it to you after it's given to the council, and I just think that renders your opinion a little less valuable. So that's kind of the trade-off. So anyway, it's up to you.
In all our business matters, our goals are to be agile. And I think that when we hit the mid-year in our calendar next year, we don't want to be hampered and say, oh, well, we approved our calendar back 9 months ago and we can't change anything. So I'm sure there's a mechanism by which we can make that small change. Are there any other comments on the treasurer's report? So, Mr. Treasurer, Mr. Chief Deputy Treasurer.
Thank you for straightening that out for me, Neil.
We appreciate your report. And for the commission, looks like we require a motion to receive and file.
I so move. Public comments?
Yes, we should open public comment before you motion to receive and file.
Public comments?
Gary
Hi,
Yost,
welcome.
former Budget and Finance Commissioner. Well, when I was on the commission, we had the opposite problem that Steve is facing. We had a situation where the economy was probably going to slow down, and it did, and we were going to go into a declining interest rate scenario. And we were advising Ernie, the treasurer at the time, not to be investing in these callable bonds, which he was, because he had a ladder, and the bonds were callable, and the entire ladder collapsed because everyone refinanced their callable bonds. So it's not just have a ladder, it's what types of bonds you're buying. So there's such a thing as Treasury inflation-protected bonds you can get, which if interest rates go up, they can index up, and you're not going to hammer it on the principal balance. Everyone knows as the rate goes up and you're holding a 1.5% bond, not only are you using the yield, but the principal value of that bond is going to plummet. So unfortunately, it looks like we have a little bit of a blind policy that just talks about average maturities, but it doesn't necessarily talk about the different types of things you can do within that ladder. So that's just an observation I'll make, that maybe we can explore that and get some longer term yields, but protect them with various tools that are out there.
Thank you. Appreciate your comments. Good evening.
Good evening, Matt Capodiaconal. I live in District 2. In considering these priorities on safety and liquidity, this is contradictory when you're trying to increase the weighted average maturity, particularly in a situation where there is a high likelihood, despite whatever is saying in Vegas, that the Fed will raise interest rates. It will happen. And what does that do? fixed income securities are not done in a linear fashion. They're curvature. There's a thing called duration. When interest rates go up, bond prices go down. The further out you are on the maturity curve, there's a sharper, and not a one-to-one decline, but a sharper decline for those underlying securities, which is exactly why the mark-to-market of today's portfolio is not at par, it's under par. And so in order to truly comply with safety and liquidity, it is my opinion that the weighted average maturity should actually be decreasing, not increasing. Secondly, I do recall when Mr. Phillips spoke to the City Council, and I did not have a good opinion of him. But particularly what was interesting was when I asked him the same question, he pointed to the upward sloping curve. The same day of that meeting, the 30-day rate was at 1.3%. The 6-month rate was at 1.3%. So it's pretty logical. I'd rather put my money in shorter dated paper, 30-day, than 6-month. So I don't know if his eye's really on the ball. I already mentioned the mark-to-market. I thought Mr. Samples brought up a good point, a very valid point about benchmark. It's easy to gameplay. I mean, if you have apples and oranges, a portfolio full of treasuries, you throw in some corporate bonds in there, medium term, high grade, whatever, all of a sudden the yield looks magically higher. Now, this is great when things are going well. If things aren't going well, then all of a sudden things could reverse. So again, the eye needs to be kept on the ball, and I don't know if it really is. Lastly, I noticed Q4 and Q1, the total portfolio size decreased pretty significantly. I don't know what that is due to, but if there could have been further delineation and more description on that for you all as well as for the public.
Do you want me to address any of those?
Please.
Okay, so we do have historical performance in the portfolio going back to 2013. And I think I would infer from the speaker that we would be hurting our returns by following the current policy. But if you look, our returns have increased month after month and quarter over quarter, year over year. So I have no plans to change the policy nor the advisor. We've gotten very good advice for some time. We did review the policy just last meeting, and I think we made some good changes to maximize the yields we can get within the confines that we operate under. And then when you talk about weighted average maturity, the amount we can move, again, we already had this discussion, but is only between, I think it was, didn't we say 1.5 and 2.5 years? So there's not a whole lot of room to move there.
Where do we get the numbers for our compliance? Is it from something that we've completed on our own? Is it something from the advisor? So, for example, the average weighted maturity, whether or not we're in compliance, is between 1.5 and 2.5. Where does that number come from?
We can't go over 5 years, period, without getting city council approval for the exception. That comes from the policy itself. And then there are best practice guidelines for public investing. They fall generally in this range. And so then we take those best practice policies, we run them by the advisor. He might tweak it a little bit, and we bring it before the council, before the Budget and Finance Commission, and then the council. That's the process.
So the seed of these numbers is best practice according to a state regulator, according to the advisor?
No, state regulators set regulations, not best practices. Then best practices operate within the regulations.
Well, I'm trying, maybe I'm asking it the wrong way, is we've got a list of, say, 15 items here, and we've got numbers to determine whether or not we're in compliance. Those numbers came from somewhere originally, and then were sussed out or developed into this policy.
Correct.
And where was the seed, the genesis of these numbers?
We have that discussion during the policy discussion. When we've got all those details, I would defer that discussion to the policy discussion. But if you want to have an offline discussion, maybe you and Mr. Samples would be happy to do so.
Okay, thank you.
So the big decrease from fourth quarter 20 fiscal year 16-17 and this first quarter, it's like a What is that, what was that due? Do we have a CalPERS payment or something? What was
Yeah,
that?
we addressed that. That was the
Yeah,
CalPERS
that's what
payment.
I wanted to understand. It was the CalPERS payment. I
Right.
just wanted to reinforce that. Thank you.
I'd like to reinforce the fact that I think we're now in a changing, I think everyone agrees we're in a changing economic environment. And my stockbroker reminds me regularly that past performance is no indication of future success or future performance. The fact that we've been able to outpace our benchmark, wherever that came from, over the last few years, I think is impressive. But I think it's a good time to review and keep our eye on the ball with it, because this year is the first time in 7 years that the Fed has raised interest rates.
Yep.
And every indication is that they will probably continue to rise. So I think it's the wrong time to sit on past performance.
Okay, so again, we have a structure. I mean, I agree with you. The way we address that is the structure of our investments, which is a laddered portfolio. And so as things mature, and we just came through a declining rate environment in which actually a number of bonds were called, but not all of them. By the way, the bonds that guarantee rates are often more expensive, so without risk, there's no return. Anyway, there are different types of laddered structures you have. You can, have them barbell or what have you. Again, we have had money highly liquid to the extent that it exceeded our portfolio and policy limits, and we had to invest that money. So if you're looking at changing the policy because we're in a changing environment, I suppose that's something we could look at. But again, it's safety, liquidity, and yield, and the last thing we want to do is lose money, lose principal.
Well, trust me, I'm glad this is your problem and not mine. Okay? I'm just suggesting that reviewing that and continuing to stay on top of it with the changing environment that we have. I mean, the other side of this is we all know that the stock market is in the longest bull run that it's had in forever. And the question is it ever going to break, or is it just going to keep going higher? So that's for all the professionals to deal with, and anything can happen. I'm just suggesting, rather than looking backwards, we need to be very careful looking forward how we invest our money.
I agree with you, and that's why we meet with you. It's one of the things that philosophically that interests me about this is when you buy stocks, it's an equity, you actually own something, and we're not allowed to buy stocks. We're not allowed to have equities, but we can buy debt. Somehow debt is safer than having an asset, which is the most ironic thing, but that's just how it is. So I know there are comparisons to the stock market. Again, I was on the council when returns on the stock market were enormous, and the treasurer would give reports. And while the returns were much higher than they are today, they were earning 4, 5, 6%, I think maybe up to 10% at one point. It seems so low. And, we would wonder, how come they're not earning more money? Well, the reason is it's safety first. And when the stock market crashed, Ernie looked to the untrained eye. Ernie's performance did not look good. When the stock market crashed and we didn't lose anything, he was a rock star, and our policy really shined. So, I have lived through that, and that was just some personal experience I had, and I had a lot more respect for the Treasurer's Office when we went through that crisis.
So, Mr. Treasurer, as you noted, in the advisor's report, there's additionally economic content and not forecast, but mostly history.
Yeah.
So I would, throw out the comment, which is current through September of 2017. So they are keeping an eye on where the markets are going, and you can see that they are commenting on various current events. Chairwoman Yellen dismisses long-run inflation concerns, et cetera. This is, a couple weeks old.
Yeah.
As many, whether it's the market or Even in our own business, the hurricane damage was less than expected, so I can see they are keeping current and presume that we're confident that they're looking forward as well.
Yes.
So there is, in-depth economic analysis in their report as well as simple reporting of results.
Yes. Yeah, I think you'll like the read. Just digest it. If you guys want to bring it back next meeting, we'll come back and discuss it. I know you haven't had much time to look at it. So look at it this week, and if you want to bring it back, we'll come back to discuss it.
I think it's a good idea to bring it back, or at least have it as an option to bring it back. And if we bring it back and everybody's looked at it and said, we're all good to go, then it's dismissed rather quickly.
Yeah.
But if there are some other concerns or questions that come up, we then have the opportunity to visit with it.
Yeah.
Without having to wait till the next meeting.
Correct. I mean, because you've got two basically brand-new people and a couple other newish people, that's fine to do. After a while, this is pretty formulaic, and you'll be able to get through it pretty quickly. But yeah, we'll be happy to go through it with you again, if you like.
Baby steps.
Any other public comments? So I believe we had an open motion and second to receive and file. All in favor?
Aye.
Aye. So moved.
All right, thank you very much.
Thank you,
Thank
sir.
you again.
Thank you.
Thanks, Steve.
Very good. Okay. Number 9, the Municipal Improvement Program. Looks like it's coming up on PowerPoint. This report, thank you, Commissioner, is from a query commissioners raised at our last meeting. So thank you for preparing the report.
Sure. As you said, this was requested at the last meeting. To start with, we have a definition of capital projects for Redondo Beach. It's new, replacement of, or improvements to infrastructure which have a minimum life expectancy of 5 years and a minimum expense of $15,000. So for those projects, this timeline I pulled up, it's in our adopted budget document, and pretty much remains the same from year to year. So while the city manager is gathering his input from the commissions in January and February, staff is preparing their requests for the CIP Review Committee. The committee then takes the input from both and ranks the projects using the council-approved criteria, and those criteria are in your admin report. Once a preliminary list of CIP projects is completed, it's brought to you, the Budget and Finance Commission, and the Public Works Commission at your April joint meeting. From there, any changes to that are included in the city manager's proposed CIP that's released with the operating budget and in May, and then adopted in June. And so that's what I had on the process. We have Brad Lindahl, our Capital Projects Program Manager, here tonight, and so between the two of us, we could probably answer your questions.
Okay. Did we have questions on the report?
I have some questions, please. So mainly the reason I wanted to talk about this is the issue of deferred maintenance and some latitude for our department heads. So the way the process works, if Ted Saman is looking around, or somebody brings something to his attention, or somebody is looking down there in the harbor, and they identify an issue that sort of straddles the line here between what could be a CIP or is deferred maintenance, is there a process for that person to initiate the conversation? Because the way that it's described here, it goes from sort of the top down, and we're involving the people who experience this on a day-to-day basis last, or almost last in the process. I'm sorry, did you want to speak to that, Brad? The other thing I suppose would be that when you're talking about $15,000 as an expense for something, I don't know how old that number is, but it's not really hard to come up with something that's going to need more than $15,000 to fix it or replace it. And I just want to get an idea or grasp on how old this process is and how it works with deferred maintenance for things. I realize that it's described as new replacement or improvements to infrastructure. To me, a deferred maintenance is almost always an improvement to an infrastructure, because you're taking something that's not quite up to par or snuff and you're repairing it. So do we have a process to, one, give the people on the ground, our department workers, an opportunity to initiate this? Two, how old this process is and how is it where do these numbers come from? And then three, if we're really in a position maybe to have something to give those people latitude, that it's doesn't have to be a CIP, but they can initiate it and make it a repair.
Good evening, Commissioners. Brad Lindell, Capital Project Program Manager. It's great to be with you tonight. About 6 months since we were last together, looking at these projects that some of them are currently underway. The numbers you mentioned, 15,000, 50,000, and over 50,000, goes back to our city charter and to our municipal code. So it's broken down, the $15,000 number is broken down for the bidding requirements on that break. And maintenance items can be addressed under 15,000, but as you say, that doesn't cover much. We are currently, I believe the council just approved in the last couple of months an on-call multi-year contract with Meeks to address issues that come up on our pier. Because a lot of issues with our wooden pier, we'll have a storm, it's in fine shape, we have a storm, and we have to go, all of a sudden we have emergency repairs because things broke down, then we have to go through the contracting process. So what they just approved was a multi-year contract with them, on-call service to kind of address these capital projects, but yet their maintenance, because it's gonna occur, on an ongoing basis. We have addressed the issue because maintenance is addressed in both the municipal code and the charter, that some of that can be handled, but again, that goes back down to that lower threshold for those codes. So we are currently working with our new city engineer to try to address more of these on-call services for items that are more of the maintenance issue. For example, another item, with last year's rains, we had several sinkholes that came up in the city, and trying to have some on-call services for storm drain repair and such. So unfortunately, a lot of it is historic. It goes back, so you have to change the code, and changing some of those other numbers are more difficult through the code and the charter. But Marnie can probably... She's been here longer than I have. Not that many people have been here longer, but I think those numbers have been in place for many, many years. Okay,
I would say, wow, that we have to change our city charter in order to change that policy.
Yes.
Okay, I did not know that. I'm glad. That's my thing that I learned today.
Another thing I think is worth noting is that it is two requirements, that they have a minimum life expectancy of 5 years and that it exceeds the $15,000 threshold. That's correct?
Yes, except in the case that it's some related preliminary part of a program. For example, if we're doing, we can be doing design, paying for design, or we can do some initial planning for a multifaceted program. But so that's kind of like the preliminary phases, but that can also be included through our capital program.
So if we wanted to, as a commission or as a city as a whole, address this issue that it seems like kind of a low number, it hasn't been visited in a long time, would that be something that we as a commission would discuss and then refer to the city council to address? Or is it something, a charter change is a pretty dramatic thing, which I'm surprised that a number like that would be incorporated into the city charter. Do you know, Marnie, is there a process for visiting that?
I don't for sure, but I know the times that we've done charter amendments.
It requires a vote for the people to change the charter.
Okay.
It does, and so typically there's a, committee formed for charter review, and
So we'd really
It's
pretty
a
much be
big
siloed
process.
into having these things fitting those two requirements as capital improvement projects only. It seems like we're by formula making some of these what would otherwise be deferred maintenance issues and giving latitude to our department heads to repair things and maintain them, but we're prevented from doing that in some way.
I think we would be right there with you if we could make these changes.
Well, I mean, basically though, but with the 5-year, I mean, you should be able to do maintenance stuff that's, with the it has to be 5 years to be in the CIP, if that's what.
Correct, and there has been
So, I
some-
mean, I think that might be the issue with,
I think the
it
5 years is
falling
a
under-
tremendous
Yeah.
latitude.
Yeah.
When you look
So-
at what would be considered maintenance versus a capital improvement. By the way, Commissioner, I completely agree with you. And I think, the least we would want to do is to raise this as a query up to staff. How does this go about being looked at? I completely trust that we understand it must be changed by the city charter. Is this something that is to, laypersons so illogical? Perhaps you can request the city attorney take a look at it. Would be something we would recommend and find out. And in the long run, any financial limit that has been in place and is permanently set in place needs to be visited and
Yes.
revisited. But I completely agree with you, and that was my feeling. Tremendous latitude. When you're saying what we want to do is empower our people to do the work that they need to do. With the 5-year window, when you get outside of 5 years, it's not really maintenance. It is, well, I'm just speaking from an accounting standpoint, my, narrow area of expertise. It is something that is extending the life of the asset, the building, the equipment, whatever it is. So I think there's a lot of latitude there. Having said all that, I completely agree, and I've made it as a note. We will have a few items that we will refer up to staff for advisement.
Well, I'm not going to object to a yes. So, and we'll get to visit it another time. Thank you for that. And I think it's well said and well placed. If I can ask then the last question again, please, and thank you for your time being here tonight. Along those lines, or based on what Chair Johnson said, does the staff have that kind of latitude where they can go to their director, say Ted Saman or somebody in the harbor, to say, this needs to get done and initiate that process?
Yes, and that happens on an ongoing basis with,
Okay.
As the needs arise.
Okay. Just
And
seems
that
like,
the ongoing basis is both in the operating budget and the capital improvement program. The capital improvement program is modified throughout the year
right.
quite
There
often.
seemed to be a great disconnect between when you looked at all of the deferred maintenance in the harbor. That just wasn't getting done, wasn't getting listed as a CIP, wasn't being done as part of regular maintenance, maybe because it was going to be a life expectancy beyond 5 years, and nothing was happening. And I can't imagine that some conscientious person down in the harbor wasn't looking around and saying, hey, well, I see rebar. Or the bathrooms at the north end of the pier, they don't work. And changing out a bathroom would probably be $25,000. But not initiating that request, or maybe initiating that request, but the process breaking down somewhere.
Yeah, I would understand.
And that's, at the end of the day, I suppose that's the most important thing to me, is that some of these, for lack of a better way of putting it, small deferred maintenance items are being hamstrung in some way that they could otherwise be done. So,
Totally
thank you.
agree with you on that.
Yeah.
The pier thing, pier parking structure. Thank you.
This has been a real eye-opener, and it just harkens back to a problem that the next street over from me, it took almost a year to get pothole repairs done in the street, and I can imagine that this is exactly the reason. It was deteriorating asphalt, and they ended up having to come out and completely dig up the street and replace it with concrete. So I'm sure it was more than $15,000, and I'm sure it wasn't in the CIP. And in the meantime, everyone in the neighborhood was frustrated with their cars being ruined running through the potholes.
Well, I read through an email about 6 months ago from, before the sinkhole happened on Ford Avenue. Thank you, Brad. Before the sinkhole happened on Ford, where an engineer who lives over in District 3 over there went to the city because of all the flooding. And the Public Works Department basically threw up their hands and said, there's nothing we can do.
Right.
And that shouldn't happen.
And so the belief is they threw up their hands because they said, this fits these criteria, it's got to go into the capital budget plan?
It couldn't. Things can be modified. Like I said, the operating budget can be modified during the year, as well as the CIP budget can be modified during the year.
I just don't know if the
I don't
staff
think
can
the
look
definition
at
of
that and
CIP affects.
if the staff cannot throw up their hands and say, okay, we can refer this in some way, if the staff initiates a CIP, if that's the case, or the staff has.
But if it was money related, and who knows, it would take a modification, even of the operating budget. There's not really a difference between the two when something has to be get done that wasn't planned for.
How do they determine, or how is it determined whether or not something is maintenance versus replacement? Because that would affect the 5 years as well.
Yeah.
Right.
Okay.
I'm sure it's on a
Yeah,
case
because
by
bring it back
case
and
instead
we're
of
gonna
them
talk
fixing the
about
it.
pothole, they had
Depends
to
if we're
redo
talking
the whole
equipment
street
versus
and
real
make
estate
it,
versus streets.
Yeah, there's an
something like
amortization
5
schedule
years.
associated with everything.
Yeah.
I'm sure that's an analysis of, what's more cost effective. If we just patch it for today, how many times are we going to have to patch it before it exceeds the cost of just doing it right and it lasts for.
And then you get into a different type of deferred maintenance where you've
Right.
patched it, and then you've created a problem that's more expensive than correcting it at the first.
Okay.
So I have made a note. I think we will raise this as an issue for question in our final action today. So I do want to thank the commissioners for raising this issue last time. And of course, we want to thank Marnie for preparing the report and for the detail provided, Brad. So thank you. You have our appreciation. And we also do need a motion to receive and file this report. Any public comment?
Hi, Rebecca James, District 2. I just appreciate the work that you all are doing, and I'm sorry I haven't been here before to hear the commentary that goes on. But I do know that everyone that I've ever spoken to is completely bewildered by why we have allowed the pier area to become so run down and so degraded in so many ways. And now I see some of the complexity of the financial side of it, which I appreciate. But I think that whatever is required to reduce that bureaucracy so that people can be empowered. I know that I spoke to a public works person because between July 1st and right before the Lobster Festival, absolutely no sidewalk cleaning down at the pier. None of the pier alleys, you know, the International Boardwalk or the upper level were cleaned at all. And it just gradually just built up and built up and built up. And I called the city several times and they kept telling me that it was Public Works responsibility and they would take care of it. Ultimately, it wasn't done until the Lobster Festival. Chamberlites got involved and got it done. So thank you very much, though, for your work on the CIP.
Appreciate your comments.
Hello again, Gary Yost, former commissioner. I have a couple comments on the CIP process, but before I forget, what we would do as commissioners, if there were policy things that came up during the course of several meetings, we would make notes of them. And we wrote a letter to the city council from the entire commission. And one year we had 10 recommendations on there to address a variety of things, and we felt that was a more powerful way to voice our policy opinions directly to the city council who makes policy decisions. And if it was kind of a fix-it thing, then we would just talk to staff, and within their realm of authority, they would just take care of it. So that's just an idea for you folks, to try and don't lose these things, because there's value to collecting things like this and sending it directly to the council. As far as the CIP goes, boy, I've been involved in the waterfront since the year 2000, and one of the most frustrating things that's really hogtied the city's decision-making is the lack of a master plan for the entire waterfront. Along with, when we run the Budget Finance Commission, we would approve these CIP budgets, and we see all these wonderful projects in there, and there wouldn't be money for them, so they would schedule them. Well, this is 2 years out, this is 3 years out, this is 4 years out. Well, sure enough, next year would come along, we'd see all these wonderful projects in there, but now they just slid out a year. And there was never the funding to do it. Now, your next agenda item, I'm going to talk about internal service funds, and that to me is, you know, the 800-pound gorilla in the room as to why there's no money down there. But if we don't have a master plan for the whole waterfront, it's kind of hard when the council does their strategic plan and they pick these CI projects, like the bathrooms. Someone made a comment, the bathrooms on the pier don't work. Well, if they're going to tear down part of that pier, no one wants to sink money into it. We had the same problem in the Seaside Lagoon. It sat for years running downhill because no one really had a plan for what we wanted to do with it. So I know land planning around the beach has been quite a topic for decades, but I'm hoping that with some new open minds on the city council, we can get to the point of having a master plan for the waterfront. And that'll give us a framework for where we need to invest to fix this stuff. It'll help them prioritize the CIP projects. And then if we address the funds in the harbor, which is the other side of the equation, we can have all these wonderful CIP projects, but the reason they get delayed is there's no money. So if we have a plan and we have proper funding and we have a structure to operate in, it's going to be a lot easier for these policy decisions to get made and actually have a CIP that means something and not just a list of projects that float out there forever. So those are my thoughts on that. Thank you.
Thank you. Appreciate that. Other public comments? Okay, commissioners, do we have a motion to receive and file CIP report?
Motion to receive and file.
Second.
All in favor?
Aye.
So moved. So Marnie, you are fortunate to have the floor yet again tonight with another inquiry from our August meeting in regards to liability insurance and internal service fund charges.
Okay, yes, this was another referral. And attached to the admin report is our city's APP, Administrative Policy and Procedure regarding internal service funds. That APP describes how first, what each of the charges or allocations are to each department and each fund. And then from there explains how what costs are allocated and how they're allocated. So the specific question that was requested to be answered was regarding liability insurance and how that's allocated. I figured probably the best way, like I said, it's all laid out in the APP and summarized in the admin report, but probably the best way to explain it would be with an example. Oops. So, as far as costs that are allocated for liability insurance, we would take the risk management budget, all their personnel costs, their maintenance and operations, and the internal service fund and overhead charges that they're paying for services they're receiving, such as payroll checks or their offices being cleaned or things like that. From that, we would take out the insurance premiums because those will be allocated separately. We would take out the insurance claims because those are being allocated separately. And then all those costs are allocated through the self-insurance program fund, of which the liability insurance allocation is a piece. So the liability insurance issues are, and all of these numbers are just made up. It's just for example. Say they're 10%. So then for liability insurance, $75,000 would be allocated out to the departments and the funds. The other piece we pulled out of the risk management expenditures would be for the premiums. So that's made up of workers' comp premiums and liability premiums. So in this case, again with these made-up numbers, liability premiums of $1,750,000 would be allocated out to the departments and the funds. On the insurance claims, in an effort to, because insurance claims come in and they're settled when they come in and when they're settled. Yet you can't smooth them we haven't budgeted for that this year. They are just going to be what they are. So to smooth as much as we can, we take the claims that have been paid for the last 5 fiscal years, and we averaged those. So instead of having $1,750,000 one year and $750,000 another year, we're going to take that average of $1,350,000. And then this then is the total for risk, for liability insurance that would be allocated to all departments, all funds, would be the $3,175,000. Again, just made up numbers.
So Marnie, the, on that slide, when it says claims, those are the deductibles and then just payments, essentially.
Yeah, settlements.
Settlements, great, thank you.
Does that include things like loss adjustment expenses and other associated expenses with the claim, or is it purely based on the total paid? Is it the total paid out, or is it specifically the claim itself? Because they're two different things.
It would be the total paid out.
Including loss adjustment expense and those sorts of things.
I'm not really an insurance person, but I would say so.
Okay.
So are you referring to external legal costs or?
Correct, that would be the LAE associated with processing the claim, which would be a total cost of it. But those would be ongoing expenses and not the ultimate expense. They might be bifurcated within the way that comes in. because you pay the claim when it comes in. But while you're leading up to when the claim gets paid, you're paying attorney's fees and court costs and other things associated with that claim.
Yeah, and this is as it's expensed.
Okay.
So, yeah, you may see one particular matter spread over
A number of
multiple
years.
years. Yes. So then we get to allocating those liability expenses. So we'll take financial services as an example. And again, we're not the actual numbers. City Hall is approximately 25,000 square feet. Financial services, as an occupant of City Hall, those offices take up about 2,500 square feet. So any costs allocated to City Hall financial services would pay 10% of that. So for the way it's worded in the APP is current value of the structure occupied by the department. So this would be for the premiums. So say City Hall is insured at $10 million, financial services square footage percentage is 10%. That's 10% of just City Hall. The total insured value of all city facilities, again, not a real number, 200 million. Financial services percentage of that total number becomes 0.5%. We multiply that 0.5% by the insurance premiums that we saw in the previous slides for a cost for this particular component of the charge to financial services of $8,750. Then we come to the allocation for claims. Say general liability claims, which are the ones that City Hall occupants pick up. Again, financial services is 10% based on its square footage. The total liability insurance claims is $1,350,000, of which the $350,000 is a component. So that brings financial services percentage to about 2.5%. So the charge to financial services for claims would be $33,750. Then the one that's really hard to explain, and the reason we have software to calculate our internal service fund charges, is the first part that we looked at of the risk management budget is taken through the software program. All those factors we just discussed are cycled through a couple times, and let's say, and this is a high number, let's say financial services would be 10% of that $75,000 or $750. So when you look at financial services charge for liability insurance, it would be the total of all those three components for a charge of $43,250. And that's pretty much how that works. The other allocations work very much the same, especially workers' comp. Being insurance is, it's very similar to this, but everything in our whole cost allocation plan is based on the percentage that department or fund uses of whatever services is being provided.
Right, so the general concept is those costs are allocated based on labor dollars or square footage, or usage in some manner. And I can anticipate my colleague's question. How often are these standards reviewed and updated?
They are looked at annually. They haven't been to council for approval or anything in a while. They are brought before council as part of a budget response report, at least annually with the proposed budget, sometimes even, well, I'd say always also with the mid-year budget. What we do is we recalculate, because we're doing it on the last completed fiscal year's expenditures, so we recalculate every year, and the time we do that is at the mid-year budget. We used to try and kind of guess at it and do it for the proposed budget, and we just were running in circles. And, you know, well, if you update this, then you have to update that. If we wait till mid-year, we've got completed actual numbers, and we can do that. The charges to the departments and funds are also reviewed by the departments that are being charged each year before the numbers are finalized. At that time, they have the authority to say, hey, yeah, I see that you're calculating it this way. I don't really, you know, we don't feel that's fair. This other way would be better. Oftentimes, the different departments are not in agreement over that because, of course, you know, the full amount of the expenditures have to be allocated somewhere. So changing the way that it calculated, you're going to have winners and losers, and you kind of have to, you can't go based on one department saying, I don't like it calculated this way. But if that does come up, we will run it by all, and if there is consensus to change it, we would do so.
Yeah, and I appreciate that. And of course, the point is to make sure that the method of allocation, to the extent that it's possible, bears relevance to what's being allocated. And sometimes labor makes sense. And, you know, for example, certain times square footage of departments don't make sense because it bears no relation to how the costs are incurred. So I think we appreciate the illumination that these discussions actually take place, and that you know, there is ongoing consideration of the relevance and relative fairness of the allocations.
Yeah. The other thing we've done to make it fair is going back to the actual expenses. Back when we were trying to do it on budgeted, it was so arguable. You could say, yeah, but I didn't have that position filled for the full year, or something like that. And it was just very subjective. When we get down to actuals, it is what it is, and hard to argue.
So I have some questions, please, Marty, and thank you for doing this.
Sure.
The first question I'd like to ask, if you go back to the first slide, you had a note on there was percentage of time spent. Can you tell me what that is?
Yes, so the Risk Management Division of Human Resources, we ask them each year, okay, the previous fiscal year, you had these activities, and namely, their activities are going to be workers' comp related, or they're going to be liability and property insurance related. How much time did you spend on
Risk management person?
Yes.
Are they city employees?
Yes.
Okay. Another question, you said there's a software that you're using to calculate the ISF?
Yes.
And is that a software where we come up with the numbers, or is it a box that we bought that has actuarial tables in it?
No, no. It simply has the flow in it.
It's more like an Excel spreadsheet.
Yes.
Okay. The risk pool groups that we work with offer actuarial services. Both our former one, ICRMA, and our current one offer actuarial services to have professionals, PhDs in mathematics, people who do this all day long for a living, come up with numbers to assign what the actual cost or charges to each department and each building and each portion of this should be. Have we
Now,
ever
we're-
considered availing ourselves of that?
We are using that to an extent, to,
My thought is
well,
that,
probably having used a city hall department whose insurance claims are the general liability claims. Probably doesn't give you the best picture of that, but they do categorize our claims for us. This much was based on things that happened with streets or vehicles or police officers or
well, what I'm saying is that, with respect, the way we're doing this is very elementary. And it's very,
It is, and we've had
and it's a lot of money.
and recommendations from other cities that we're going into too much detail. So it's all over the place.
well, I would disagree with that. I understand what you're saying.
We did too, and hence we've kept going.
Because, you've got just a few categories that you're breaking down here in order to determine things. And more than anything else, it's really malleable. It leaves so much latitude. And so you may unduly burden, as you described, one department over another. You are picking winners and losers, and that we're talking about a lot of money. I think that we should be more formulaic about it, rather than picking winners and losers and determine what the actual charges are. I'll give you an example on workers' comp, which we didn't cover, but the personnel cost for work comp, all things being even, is going to be much lower for clerical duties than it is for somebody who's working waterside at the harbor.
Yes, and our workers' comp claims are broken down for us.
But it's not a claim, it's the payroll associated with the personnel cost.
And our premiums are based on our personnel costs. And so if we had used, workers' comp, if we were discussing that, there's a component of that looks at salaries.
Okay. But as Mr. Johnson mentioned, when you capture things in a particular way, when you're just talking about square footage, you're not really talking about what the classification is, what that hazard might be. You could have somebody that is in a riskier profession, say on work comp, but there are no claims. So you're capturing that labor cost, but you're not capturing the potential of the claims. That it just so happens over 3 or 5 years we got lucky. So that department might not be paying their fair share of the risk in a situation like that.
But again, our whole process is looking back, not guessing who's going to end up, which is more subjective.
But insurance
We're
is all
looking
about
back-
guessing what's going to happen.
We're looking back at what did happen. And, for workers' comp, we're looking at those claims that have been filed and by which individuals in which departments.
I guess a better question maybe would put it, given the past history and then going forward, How close has your estimates or numbers been in terms of every single year in
Like I
assessing?
said, we're looking back. We're not estimating the future. We're looking back at the claims that have been filed, the insurance premiums that have been paid, and we're, you know, we'll get to the ones in the future when they're in the past.
This is that risk management is about projections of what might happen or likelihoods and formulas. That's what actuaries do. We're trying to plan out for what might happen and charge that category appropriately, not based on what has happened. That way you're only assigning for, you might end up unnecessarily assigning somebody a higher charge based on a one-off catastrophic loss for years in a department that would otherwise not need it. A slip and fall that ended up being $5 million here in the lobby that sticks on there for 5 years, but in the harbor, maybe we got lucky and there were 3 years where nothing happened. Well, there's a lot more risk in the harbor, and if you want to plan forward for it, you should allocate more to that, but we don't because of the way that we're doing it.
But we had to pay out the way it happened, and that's what we're charging is what we paid out.
But somebody paid, okay, so somebody paid for it and it was malleable, so that's the way you did it. Do we have a schedule of all of our buildings with their values and everything like that we work off of on a master list?
Yes,
And do they use that to assign it that way?
yes,
Okay.
for the premiums. That's how we get,
And the last question, and I promise it's the last question.
No, please.
You said that we have availed ourselves of some of the actuarial services that are offered by the risk pool groups, or
the
no?
actuarial services that we do use are, we are given our IBNR, incurred but not reported.
Right.
Claims. And those we actually do book to the self-insurance program fund, and they're reflected in the claims amounts.
And that's exactly what I'm trying to describe, a forward-thinking viewpoint of incurred but not reported claims, anticipating the risk associated with the potential of claims in addition to claims that have been incurred. Not just frequency and severity, but likelihood. And so IBNR is a really important component of that. So I'm glad to hear we are incorporating that somewhat. I think that it leaves a lot of latitude. And I could see how some of the staff or some of the departments would be upset about what they're getting charged or not charged, that there are winners and losers in all this. It's really interesting to me. Okay, thank you for that.
But now that it's been in place for quite some time, you know, when we first went to the very detailed and went over it with them, there were more questions, and you know, we did do revisions and all that. As it's been in place for a while, we hear less.
Okay, thank you.
So I think it might be helpful for the commissioners to understand the consequences of the allocations. As you pointed out, these are actual expenses that the city must incur one way or the other, and what we're talking about is how we allocate them to different funds and
Exactly.
different allocations. And so over time, would there be a concern that, well, I can think of two concerns that, one, it's a possible concern, is that people might behave in a risky manner because there's no consequence to them. I'm not sure that's a serious concern, really. The other would be that the budgeted funds allocated to a fund or a commission or a department might be overly generous, or they might be penalized because their fixed budget is somehow affected by these allocations. I wouldn't think that would be the case either. You know, this is a non-cash expense to any, certainly it's allocated, but as you mentioned, when these are done over time, their budgets adjust to their actual needs and this is just an allocated expense.
Right. The budgets that the departments, I would say, are most focused on is their maintenance and operation budget.
Yeah.
You know, in preparation for the budget being adopted, in preparation for the proposed budget. And if their internal service fund or overhead charges go up, they are not asked to cut from their M&O budget.
That's the question I'm
in
asking.
order to
Right.
fund that increase.
Right. So in essence, we hit them with an allocation of expense, but also provide them
Yes.
resource to cover that expense.
That's just a book charge.
Yes.
Okay.
And, you know, point well taken that, you know, if it's making something look not the way it should in the financial reporting because they're not absorbing their fair amount of the cost, or, you know, then it could have a negative consequence. Were there other questions? I believe we had a public question on the allocations. Comment?
Gary Yost again.
Again,
You may get tired of having me come down here, I'm not sure.
thank you.
This whole issue of internal service funds has been a big thing with me. While I was on the commission and after I got off the commission, and again, it ties to the harbor funds. And there's a couple key points that you need to be aware of. And you just talked on one, that when they're done with this little simplistic allocation, it's probably okay, because it's just an allocated cost that goes to the department. And if the fire department says, well, wait a minute, we don't like that, then the council on paper can just say, okay, well, we'll give you another $500,000 on your budget to cover the increased in internal service funds you just got. And they say, fine, well, everyone's happy. Because they are focused on their maintenance and operation and personnel, because those are hard costs that they have to write those checks, and it impacts their ability to provide service out of that department. If you notice on the budget financial statements for the city, when they have these internal service fund charges that go into all the general fund accounts, it looks like it's budget money that's being spent. Well, there's a big adjustment line at the bottom of that financial statement where they reverse out all that internal service fund revenue, because it really isn't collected. It's just general fund to general fund division money. It's kind of like paper money or monopoly money. You can allocate a bigger number and they complain, so you just raise the budget and you solve the problem. Enterprise funds are an entirely different matter, which the harbor tidelands and uplands are. When they come up with either a simplistic allocation scheme or a very precise allocation scheme, there is a fundamental difference, because when that charge hits an outside enterprise fund, it is a cash transfer out of that fund into the general fund. And we're no longer talking about monopoly money here. We're talking about real money. The Performing Arts Center, the Tidelands funds, the Upland funds, you need to understand that critical distinction, because that is one of the reasons why, you know, whatever allocation they have in the general fund, it's money in, money out. In the harbor fund, it's a direct cash transfer. Now, if they're using the square footage of City Hall that the harbor department uses to justify what is turned into $2 million a year, not just the insurance one, but all of the internal service fund charges, well, I would argue, well, we'll just contract the management outside. Simple. We'll hire an outside management company to come in here, oversee the leases. They're all ground leases, they're all long-term leases. It's not a lot of day-to-day work down there. We'll use no square footage in City Hall, and there'll be no justification to charge $2 million a year to the harbor. I would like to seriously look at that option if this is really what's happening here. On the insurance fund in particular, when I reported the whole insurance fund transfer issue to the State Lands Commission, one of the things they did, and this is some of the loosey-goosey stuff that councils do.
Motion to extend?
Second.
Favor.
When they needed to build the North Branch Library, they needed to find about $4 million to do that. So they went looking around and they came to a conclusion that the self-insurance fund was over-reserved, that they had collected more money into it than they needed to pay out in claims. And so they said, we have an excess here. We're going to take $4 million out of the self-insurance fund as a one-time adjustment. Took that money, built the North Branch Library with it. Well, guess who paid into that self-insurance fund? The Harbor Enterprise, the Tidelands Fund did. So what this ended up being was a direct transfer of Tidelands and Uplands funds into the North Branch Library. Now, it's an honorable thing to build a North Branch Library. That's not the point. The point is you need to look at this stuff very carefully as to the actual flow of cash within the system, and not just as simple like, well, we really wanted to see what the all-in allocated cost was as a paper exercise. It goes beyond a paper exercise. Now, the State Lands Commission, as part of that exposure, supposedly wanted the city of Redondo Beach to pay that money back. And that's about the time I got off the commission, so I don't know if that's ever happened. But that's just an example of why you have to pay attention and understand the difference of how a simplistic overhead allocation may be fine for a general fund account, but it has a totally different impact on an enterprise fund account. There's some other things I want to talk about on this topic of overall insurance service charges, but regarding the allocation, that's one of them. And the other comment I have, we have $200 million worth of assets in the city. What assets are we insuring in the harbor? And that might be a fairer way to allocate what the policy should be. You have to understand that all those harbor areas are on ground leases. The tenants, Portofino insures the Portofino Hotel. If someone slips and falls on the Portofino leasehold, Portofino has insurance for that. So if all that stuff is on ground leases and the tenants all have insurance, what is the city insuring? What's this charge for? I don't see how we can have an insurance charge unless there's some nexus to what it is that we're insuring. Now, if you insure the parking structure as part of the operating business of the parking structure, that insurance charge should be charged to that account just like a revenue and expense, and you get NOI. It should be a direct charge to the parking structure. Whatever revenue the parking structure generates, the insurance associated with that facility should be taken out as expense. City should get the net. So I have some serious questions about what it is we're insuring down there if everything down there is a ground lease. So those are some ideas. I may have another comment as you guys proceed with the dialogue.
Thank you again for your comments.
I mean, it's big money. I mean, the internal service funds allocations to Tidelands is almost $800,000. So, you know, it's a significant amount. And the Harbor Uplands is almost $900,000. So.
If those are triple net leases and we've allocated that risk, should we charge that department a second time for a list that's already been laid off? If those are triple net. I think most of the leases in the harbor are triple net. You may not know, Marnie.
I don't know.
Yeah, I think most of them down there are triple net. I know they pay CAM charges. And my experience is that they are typically going to be triple net leases, which would incorporate the cost of insurance into them. And perhaps even name the city as an additional insured on whatever policies are there. Certainly we need something to override it, but it's worthwhile considering, as Mr. Ost indicated, whether or not the harbor, for example, is paying for insurance twice. Or the city's getting paid twice on insurance for the harbor. Once by the ground leases and a second time by the ISF charge. To the tune of, what did you say, Commissioner Esser, you said was 800?
That, like 761,000 for the Uplands and 887,000 for the, I'm sorry, for the Tidelands and 887,000 for the Uplands, Harbor Upland.
So I don't have the list that you were asking about of all of our insured values that our premiums are based on, but it is all city-owned facilities that the city is paying a premium on. That list comes from making our premium payments. So we would not, I know that the Tidelands and/or Uplands, I can't remember, their allocation for liability insurance did go up as the city purchased leaseholds. So they were not paying internal service fund liability insurance for leaseholds that the city did not own.
Well, it might be worthwhile asking the Waterfront Economic Director how the leases down there work and how insurance charges are allocated through those leases. Because we might have a situation where they are paying twice. But certainly we own the property, and then we hire a management company. We own the leaseholds, hire a management company to manage the leases. And as a product of that, they collect the rents or handle the leases, like Mr. Resnick down there at Redondo Landing. And associated with that, there are we are laying off risk. It's a matter of whether or not it's being offset.
And you're right, I don't know, but if that were happening, the lease revenue goes into the Tidelands or Uplands Fund. Then the Tidelands or Uplands Fund, is paying that internal service fund charge to the self-insurance program fund. So that would net out, if it's happening as you say, it would net out to the harbor funds as zero if the numbers were the
If
same.
everything there was part of the Tidelands and part of the Uplands, which not everything down there is.
Marnie, is there a specific director of risk management for the city? Or who handles the risk management duties?
It's under the Human Resources Department.
It's an interesting place. Yeah. Looks like we had another public comment.
Yeah. Just Money District 3. I want to comment on the internal service funds, insurance, and so forth as relates primarily to the Tidelands Fund. The last thing our city administration wants is careful accounting of the Tidelands Fund, because it's been a slush fund piggy bank for years. And back in around 2006 or 2007, I think it was 2006, the Lands Commission was prompted to audit the Tidelands Fund because we had $11 million in it, yet we were having to borrow a boat for the Harbor Patrol from LA County because none of our 3 boats worked. And the members of the Harbor Patrol were told there's no money. 11 million, no money. 11 million, no money. And so eventually the Lands Commission sent a couple of auditors down here for about a month, and they went through the books, and they found all kinds of interesting things. They found over $900,000 that was classified as retained earnings, which the city was then forced to transfer to another account because it was really depreciable assets. I asked the chairman of the State Lands Commission, who was our state controller at the time, if he'd ever heard of depreciable assets being classified as retained earnings, and he said, no, that's a first. Subsequently, they found misuse of money borrowed from the Tidelands Fund and never paid back, and even on the payment schedule that went into effect as a result of that investigation, that money the city's own bond expert estimates that the city won't be able to pay that money back till 2050, okay? Money and internal service funds have been used as the embezzlement between departments device. I've never been able to understand why the IT department, for instance, has an internal service fund charge for IT. Okay? Which is something I found in a budget back a few years ago when I was looking at that. If you want to have an internal service fund charge for administration, that's one thing. But charging the IT department for IT services is just ridiculous. Anyway, they're not going to want you to dig into this because you're going to find stuff they don't want the public to know.
Thank you. Other public comments? Other commission comments? Marnie, some of the commissioners are noting that you are the interim finance director.
That I am. Craig is no longer with the city, and I've been named the interim finance director.
Okay, well, good luck and congratulations. We're certainly happy to have you.
Thank you.
We do require on Marnie's report for internal service fund charges for liability insurance, motion to receive and file.
I so move.
Second.
All in favor?
Aye.
Approved. So, Marty, in your increased capacity, you are certainly getting the duty of reporting to the commission tonight. Perhaps you'll take a sip of water, and we can move into item number 11, budget items for discussion.
Okay. Our last item that we were asked to bring back. Commissioner Esser brought forward items in 5 different areas: Budget and Finance Commission input and review process, budget reporting recommendations, Redondo Beach Performing Arts Center, non-decision package personnel expenses, and Visitor and Tourism Bureau and Chamber Services. I can go over real briefly just a summary of our admin report that addresses each of those items. On the Budget and Finance Commission input and review process, input from the City Council, City Commission.
Can I have a suggestion on how we could do this? Might make more sense, is why don't you go over your responses to each section and then allow us to make comments, because everything is very different, and if you go through the whole thing, it makes more sense if we, have some interchange on each topic as we go through it.
That'll work. So on this first topic, input on the budget is gathered from the City Council, City Commissions, and the public at least 8 times throughout the year. The largest number of opportunities for input is in regards to the proposed budget, but there are other times throughout the year where input is gathered. Those include the mid-year budget review and the year-end report.
Okay. My main issue I have with the way things are mapped out right now is that we basically receive the budget, like this budget's dated May 16th, I believe.
Yep, that's our
Right.
charter deadline.
Right. Okay. So the budget's dated May 16th. So obviously we get it a few days after May 16th because that's when it's put out. Okay. And then we have a meeting on May 24th for us to, regurgitate and ask all kinds of questions about something like this big, huge.
Yes, in the past, probably 3 years ago, we as staff were under the impression that the commission would want to talk about it right away.
Okay.
So
yes.
as soon as, say May 16th fell on a Tuesday, Thursday night we were at the commission with that.
No,
So
I
they
don't
could
have a
talk about it
problem with
right away.
that.
The commission requested that their meeting be delayed a little bit so that there would be time to review it. So we have implemented that.
Sure. No, my whole point is the fact that we should be, this whole budget should be really coming out in like May or like March, so that we can have at least, you know, two meetings, at least a minimum of 2 meetings here in the Budget Finance Commission to review, discuss any budget issues, come up with budget response requests that we might have and things of that nature. And that's not in this timeline. It hasn't been in this timeline. I mean, I'm not really sure because I wasn't on the commission, but I have no idea if we don't have like a budget to even look at. What are we discussing on February 22nd when it says the mid-year discussion on mid-year budget? I mean, do you guys just put like overall figures together and then we just take a look at it, or?
Mid-year budget is, all the departments are asked
Well, I'm
to-
sorry, I didn't mean to say mid-year budget. I meant to say the fiscal year 2018, 2019 budget workshop. I'm just talking about the budget workshop for the next fiscal year, because we don't have this.
It is
what
actually
are we
your
talking?
chance to provide input and make suggestions for things to be included in that document. If you're looking at it after, that doesn't, it hasn't made it into the document. If we're talking about it before it's been produced, you have a voice.
Okay, so you're saying like if we want to see some kind of capital improvement project or something like that?
Yes.
But what my main, what I think our objective here as a commission is to really be reviewing actual budget numbers, asking questions, and this whole timeline does not give us adequate time for that. Like if this budget comes out on May 16th, we have a meeting on May 24th, and we're supposed to approve we don't approve the budget, but we're supposed to, on that meeting, we're supposed to, accept the budget and file it. Well, that gives us 1 week to look through all this, to come up with questions, and then that doesn't even give you guys time to come back with our answers to our questions, on specific budget issues. I mean, I understand, I understand that the February 22nd meeting is, a chance for us to discuss like issues with the budget, like kind of basically what I'm bringing up right now as these issues. But, that's my main concern, and I know that you also had the same concern about that. And I just think that as I outlined, and that we really do need to have the actual budget released sometime in March. I mean, and really the public also needs this as well, because it's not fair to the public that they don't even have time to review it, because they don't have a whole lot of time, because the first, they make actual comments on the budget on June 6th, and then they just get this on May 16th. The average person who's not a financial guru would have a really hard time, really, getting through this kind of stuff. To even, of course, they're only going to be concentrating on things that they're interested in, but still, overall, as a budget, I mean, I have experience. I have over 20 years experience in budget and finance, and reviewing budgets, putting budgets together, and such. And this just is not sufficient time for this commission to really do any kind of service to reviewing this budget. I mean, that's just my comment. I don't expect you to have answers on this. I'm making comments. I don't know, I am giving these comments to the council, and I am, feeding the issues that I feel that really do need to be addressed, but I only see it fair that, I address it here amongst my colleagues as the Budget and Finance Commission. All I'm trying to do tonight is trying to put out issues with the overall budget process, and then also issues that
I have found with a lot of, you know, again, I was only looking at personnel expenses, but just issues that I think that we should all be aware of and look at, especially when the new budget process comes around. And so I just put together, you know, just a list of issues that I saw. Oh, yeah, I need that one, yeah, sorry. I looked through all your responses, and then I just put together things of that nature. So anyway, we're just going through the first one, and so that is my comment. I know that there's nothing we can do about it. This is the timeline, and the only people that can change this are the council members. You know, I understand that, but I guess I'm trying to, again, get a better picture or idea of what my role is here, and if, you know, and my personal opinion is my role is to bring these kind of issues to the surface, whether I bring it up here or I bring, you know, or I emailing council members or whatnot, or go to the council meetings and voice it myself. But anyway, that, I just was trying to explain what I was trying to do. This is, you know, I'm just trying to voice issues and concerns that I have with this. So I don't expect you to answer that. I just think that the whole budget schedule and process needs to be revamped so that we have adequate review time.
I would agree with Commissioner Esser in that if our role is to advise and review how we're spending the money and advise the city council to be their front line for things, certainly it would behoove us to have adequate time to review those things, have adequate time for the public to review those things. I don't know how that process gets revised,
I don't either.
but I think it's something, and I would ask all of us here to weigh in on it, something that you're comfortable with or not comfortable with. I agree with Commissioner Esser in that we really are put in the position of being a paper tiger for not having adequate time to review these things and advise about anything. It just passes right through us as if it were just checking a box on the way through.
Yeah.
I've got to be very exact in kind of supporting what you're saying. I'd like to know who sets our calendar, who sets our agenda, and what value whoever that is believes they get from us being here.
Yeah, I would like to know that too.
I'd like a very clear statement.
Well, your calendar you just approved.
Okay, well, this is my first night.
We
so
didn't- we didn't
I'm gonna
draft
play
it.
new guy.
Not that you don't want to amend it,
But
but you just approved that. The city council in January approves a budget calendar for the whole calendar year. You know, same kind of schedule you did. Yours was the calendar year. Theirs is the calendar year as well. I can, if we want to adjust that, and of course my concern with adjusting it that much forward is what about the mid-year budget? Do we just forego that because that's the timing of the mid-year budget? But, you know, say we did forego a mid-year budget and wanted to revise the calendar, I can see before that calendar goes to the city council in January, if the city manager can come back to one of your meetings and discuss that calendar with you.
Well, I would expect by now you have some idea of what the key milestones are next year for the financial events. I mean, within plus or minus a week. The material that I have here doesn't show anything for 2018, not a forecast pro forma or anything. So in approving the calendar for next year, I didn't know what I was looking at. I was following my partners here on the Diaz.
Yeah, if you're talking numbers that go into the budget?
No, I'm talking about events, like when does budgeting start? When do you create a report? There's an entire list here. There have to be 60 items that happened in 2017.
Yes.
Okay?
And this is the calendar that would be approved in January by the city council.
Well-
And like I said, I can see if the city manager would be available to come in November or December and discuss it with you before it does go to
Well,
council.
unless I'm mistaken, I didn't see anything that lists a date in 2018.
No, because that will be adopted in January of 18.
Okay, but we adopted our agenda for next year.
Yes.
Not knowing what's going to happen next year.
Well, yours is based on, if you look at yours, the CAFR in January. CAFR is always completed in December, comes to you in January.
Okay.
City treasurer's report is the next item. Those are quarterly. Mid-year budget, we need to get enough history of the current fiscal year to be able to predict where we'll stand by the end of that fiscal year, and we adjust that at mid-year. Again, we talked about the budget workshop. That's for input before there's a document, before things have been are being proposed. Strategic plan is based on the strategic plan that happens each 6 months. Review of investments, policies and principles, those are reviewed annually by you in time to go to the council in June. The proposed budget, our charter release date is May 16th. This is a bit of, week and a half-ish after that's released.
Yeah, but the problem is, like, we can't even ask questions, like, there's no, I mean, when we look at this budget on May 20, we meet on May 24th, but there's no room for questions and then you guys coming back to respond. I mean, we've got to, that meeting.
At that meeting, you have the opportunity to suggest budget response reports. Those are, they're addressed to the city council and they come back at city council meetings, but they are available, on the website to everybody. In addition, what we have historically done is we have said, Budget and Finance Commission, we know you're particularly interested in these items. We will email them specifically to you to make sure you've got them and you don't have to go searching through the whole
but
agenda.
there's no
So there
meeting.
is the opportunity to have your question answered in that
No, I
format.
understand, Marnie, and I appreciate that because you guys were very, responsive in emailing those budget response things. But my whole issue is that we don't have another Budget Finance Commission meeting, to discuss all those, those budget response before, the whole budget's approved in June. So, I mean, what I'm saying is I think we ought to have at least two, at a minimum of two, maybe, I mean, I don't know if we could add three, like we could have the February, we could have at a March meeting, and then, of course, April and May. But, in the context that we do actually get a budget to really look at, in sometime in March.
But there are only 6 meetings of the Budget and Finance Commission.
Okay. So that's a limit?
You're taking away from something else.
Okay, so there's a limit on how many meetings we can have a year, or is that, I don't know, I'm just asking. Okay. So there's a limit of 6 meetings.
Yes.
Well, they changed the they sunsetted something, I think they renewed it in August, where the commissions met every other month.
Yes.
But we do and can have special meetings. We can have more than 6 meetings.
I would have to get that clarified. I am not sure.
Okay,
I understand that whether or not they've budgeted for that and allow for the latitude to schedule an additional meeting.
Right.
That might be the solution to what we're talking about.
So I think, if we can frame this in hearing the, somewhat general dissatisfaction with the understanding of the scope of the commission's responsibilities and what the, the city council expects from the commission, what they want from us, if anything, and what our opportunities are to provide that feedback. So I think we can appreciate that it is, not the finance director who's
No, and I
who's
totally
setting those.
understand
So
that.
we,
And of course, the municipal code addressing the Budget and Finance Commission's powers and duties is included in your agenda report as well.
okay. I'm sorry, it's included in this set of documents?
In this item, yes, it's the final attachment.
Okay. Well, we should look at that.
yeah, it says in financial planning, assist city manager and city council in financial planning.
From time to time, as may be suggested by city manager or the city council. So your recommendation makes sense, Marty, that we have a discussion with the city manager, and that would be initiated, and we can do that as one of the recommendations to staff afterwards. So we will add that to our list. I think, there's a pretty clear understanding of the frustration of the scope that is, and believe me, I understand when we receive these, and there's been an effort, they are delivered by courier to our homes.
Yeah.
The second they are printed, right?
Yeah.
You come home from work, and it's in your mailbox.
I think they do an outstanding job in delivering the information when it's available. It's just a
Yeah,
question of,
The timing of our meetings can be frustrating in allowing for preparation. And to prepare the questions and to have a forum, again, to grill the cruncher of the numbers. And I'm a number cruncher, so that's by no means disparaging. Isn't necessarily where the questions need to flow up to. So I think, it would be appropriate to have a discussion with the city manager as Joe is listed. Because they manage our powers and duties. So, any other comments on if that is the next step we'll take as a commission? No other comments? Okay. All right, so, given that context, do we then want to go through all these responses?
I mean, no,
Last
my
year?
whole point in, no, because I don't think.
Point well made.
Yeah, and I don't think Marnie, no, because all I'm trying to do is get some issues surfaced amongst you guys as a group, and then, I don't know where we take it from here. I just don't. But there is some major issues that need to be discussed, especially personnel, salary and benefits, annual increases are just really shocking, to put it mildly. That's a major issue, and I'm really have some strong suggestions about making pro forma actuals as a comparison
rather than budget numbers. And you guys can read all my, you know, all my comments and everything that I put outlined here for you guys. And just on another note, just think, would like to see this commission somewhat be involved with, you know, whatever is figured out on what we're doing with the visitor and tourism and the chamber services. I think that would also should be in our scope of, to be some sort of involved with that. I know that there is a special subcommittee of the council, you know, looking at what they're going to do with that. But I feel that, you know, that is also a scope of this commission that we should somehow be involved with reviewing that and giving our comments and whatnot with that.
It does say for us to maintain a continuous study of city expenditures. That's what the code says. That's what we should be doing.
Right.
Sources of revenue, methods of proper spending, assist the city manager in financial planning recommend. Okay. So, you know, that's not something that we're going to vote on, but it seems there's a clear consensus on that.
Do you want to take public comment?
Are there comments from the public?
Jess Money, District 3. First thing I want to address here is a point Mr. Johnson raised a few minutes ago about what the council wants from you. I think we all realize that the council is undergoing a change. The next election, 2 years down the road, the council is going to be completely different. But I can tell you in the past, what the council's wanted for you guys is a rubber stamp, and they wanted cover. So a few years back when the economy crashed and we had to cut positions and so forth, they wanted you guys to do the heavy lifting, work through the details, and when the budget came to them, they could say, gee, we'd like to keep these guys, and gee, we'd like to keep those girls. But the Finance Commission has just pointed out that there's no way we can do it. Sayonara. I'm personally stunned by what Ms. Esser has discovered in her budget research, and I think it's appropriate that we start considering changes to the city charter regarding both the obligations and the powers of the Finance Commission. This commission has got to have, at some point, the power to command answers, to command documents, to function as a semi-citizens audit and oversight committee, because the councilmen can't do it. They have way too much on their plate. And as far as some of the things Ms. Esser has discovered, I think we're at the point where the Finance Commission needs to be involved in the renegotiation of contracts when they come up next time. Because I'm under the impression, correct me if I'm wrong, that we have contractual obligations to raise the salaries of people while they stay in the same classification. Now, if you want to have a COLA, 2% a year, 3% a year, that's fine. If you want to have an automatic bump after an initial 6 months or 1 year probationary period, it's obvious that after 6 months or a year, somebody can do their job better and more efficiently than when they were cold off the street. But this idea that people are getting $15, $20, $30, $50, $70, $80,000 compensation increases automatically because they showed up every morning and managed to breathe air till closing time is just absurd. It's just ridiculous. Now, there a parkette that was just completed near my house over in District 3. $450,000 cost for a parkette. I can see that park from my upstairs bedroom window that I use as a home office. There was one charge in there for 20 grand for traffic control, which consisted of putting out some little sawhorses with work zone, go slow. And it's a 4-way stop on that corner. I mean, give me a break. Private sector employees are, in many cases, overworked, underpaid, and underpensioned. That's an issue that needs to be addressed. But that doesn't mean that public sector employees should ride a gravy train. And my mother worked for the city of El Segundo for 25 years. She was a public employee. I've been a member of 3 unions, so I understand the worker side, but this is out of hand. This is completely off the reservation. And like I said, we need to have charter changes. We need to have you guys in there digging for things. We need to know that when we spend taxpayers' money on a product or a service or an employee, we're getting appropriate value per dollar.
Thank you.
Good evening, Wayne Craig, District 1. A few things that are concerning, and we've talked about these a lot of city council meetings, and I think it's probably important for the Budget and Finance Commission to look at these in the future, which is, for example, the Redondo Performing Arts Center, as we kind of euphemistically call it, the non-performing arts center. There should be some type of plan to make that either break even or, close to that if you average in all the expenses. I'm not sure why that's the case. It seems like there's a double standard. Seeing that center can lose a lot of money, but Seaside Lagoon can't. It's kind of an odd comparison. I don't know why that is, but maybe a question to ask staff would be important on that. And the city manager's department, some items that you probably are aware of, but I don't know if the public are, but 2 people's benefits and salaries are increasing over $77,000 in a year. And that's about $33,000 more, I guess, than the year prior. Each are making over $407,000 a year, salary plus benefits. This is kind of alarming, and I think, if anything, having managed large groups of people in the past, it seems like the department itself is managing their own salaries and benefit without any outside oversight. And I think that's where your responsibility comes in. You should be watching over those things and should be questioning why those are kind of going unchecked. And one other thing that was really interesting is in the fire department, seems like there's a continual allocation for overtime, which doesn't make a lot of sense. If you either need it or you don't. So if they have a bunch of overtime they've allocated one year and they don't use it, they roll it into the next year and then over and over again. Again, if you're having to do that, you don't have enough staffing. Maybe you should be looking at that. But with all the problems in the fire department, perhaps something a little bit more sinister might be going on. As you are aware, the fire union in charge of the Redondo Fire Department union was embezzling money, I think, to the term of to amount of almost $30,000. I'm just questioning if perhaps some of this overtime might be used by him or some other individuals that might be part of that criminal investigation. Maybe that's something that should be audited, or make a recommendation to be audited by the city as well. Those are just a few things, but there's some very big items in the budget. And when we're talking about things like not having $50,000 for a pump for Seaside Lagoon, and we've got $400,000 in salaries going to some city staff, I think we need to have our priorities backwards here. Thank you.
Thank you.
Hello, Joe Hersina from District 3. This is my first time of coming to a commission meeting. Over the past couple of years, I have become more interested and active in my community, the city of Redondo Beach, which I love and have lived in for a long, long time. And one of the things that going to council meetings has really widened my interest in what is going on with the city. And part of that is how our money is spent, how the budgeting is taken care of. And as I listened tonight, it seems that there seems to be a lack of communication from city staff to the commissions and to the city council. And even though it takes time for communication, it's really necessary for everyone to have a clearer picture. I think that as the commission here, we have to have clarity and transparency. And even though I'm part of the public, you are the servants of the public. The city council is the servants of the public. And the city staff, which are paid very, very nice salaries, are in positions where they must see their jobs as public servants also. So when we see very highly increasing salaries, we have to look and see just what's going on. It doesn't mean that people don't deserve them, but they need to be doing something that is commensurate with what their salaries are. It is owed to the public, to the residents of Redondo Beach, to have transparency and clarity. As a commission, you can bring this about. Your exchange with the city council will do it, and the city staff management needs to have that transparency and clarity to inform all of you, to keep communication lines open so that you really can face the public. And when things come up like saying, wow, that's a really big salary increase for someone who is just, as we said, showing up and doing their job. Doesn't mean they don't deserve it, but we need to have clarification, transparency, and reason. I thank you for everything, and it's really exciting to live in the city of Redondo Beach. I think we've got a lot going on. Thank you.
Thank you.
Gary Yost again, probably the last time tonight. It is critical that you guys are here and you're paying attention. Council's busy, they don't have time to drill into the things like you do. And staff is busy. I mean, one of the reasons why you can't get the budget earlier is Marty's got her hands full. There's a whole series of reports she has to do all year long. And there's a calendar that she's confined to get it all done. And everyone would love to get the budget in January. When I was on the commission, we had the same frustrations. What we found was probably the most effective meeting we had was the one-on-one meeting with the city manager before he solidifies his decision packages. That was probably where we had the most input. But don't get discouraged if budget season comes and goes before you really have a chance to change anything. It took us years before we got things worked through there. One of my things that I want to see done, and this took a tremendous amount of effort on the part of Sean Guthrie and myself, was the financial statements that the city uses are not industry standard from what professional real estate property managers use at all. They're kind of like fund balances and how the funds change. It's like looking at a balance sheet. You know, we need to see an operating statement. And there was a concerted effort, and staff was doing it for a while. We had a 5-year financial projection for the harbor enterprise. We had revenues, like revenues are. We had operating expenses from the harbor. We had net operating income, which is what the industry looks at. We had capital charges, and we had a capital budget scheduled in there, and then we saw what was left over, and we saw how much money we had in the funds, and there wasn't enough money. But that was a very useful 5-year planning financial document, and then we had a budget, and we can see the actuals coming in. And the city was doing this for a while, and then they didn't, you know, Bill Workman hated it, and he ultimately killed it. But the financial statements themselves that you see in this budget are not at all what industry uses to manage properties. And the harbor is a critical business enterprise that the city has, and if it's going to manage it, it needs to manage it the way that industry would manage an asset like that. And we just don't get anything along those lines out of the financial reports. Oh, they meet the government standards, absolutely. And staff's hands are kind of tied. That's the format that they have to use. But they should be supplemented with something is useful and reasonable. And on the last item, I know in the agenda packet there was a whole thing on the internal service policy that Bill Workman had written as to why we even have these charges to begin with. There's a document called OMB A87, Office of Management Budget A87, and this is the whole premise that these charges are based upon. Well, OMB A87 was written to charge overhead to grants, federal grants. If the city got a grant to repair the breakwater and staff had to get involved, then they're obviously going to have to charge some time to it. Okay, grants don't pay taxes. Okay, this whole concept of charging to the Harbor Enterprise Fund based on a federal policy on how you can legitimately charge to grant money, one-time grant money, is a stretch. And it creates a double taxation scenario because the Harbor Enterprise pays taxes. They pay, most people pay property taxes because they own the property. Well, if you're a leasee and you control the property, you pay something called a possessory interest tax. That's tax revenue. They generate sales tax revenue. All that tax revenue that comes out of the Harbor Enterprise, what do they get for that? When you own a piece of property around the beach, you get a property tax bill, you pay that bill, and you get city services for that. You don't get a separate internal service fund charges because Public Works sits in a desk and is 5% of the city's overhead charge. You don't get that because your tax revenue is paying for those services. When you have Office and Management Budget A87, which was designed to charge to a one-time grant fund, convoluted into a structure to charge overhead to a tax-paying area of the city, my argument has always been that's double taxation. And I know it was in Marnie's agenda package, the whole policy there.
Motion to extend?
Motion to extend?
Second.
but it's flawed. And then regarding your lack of time, I'm a little bit shocked that you only meet 6 times a year. We met 12 times a year. And we could pick up an issue and talk about it more throughout the year. Sometimes we didn't even have a quorum, we couldn't meet, which is, that happens. But again, this is just a bad policy by the council to cut your time to just 6 meetings a year. I don't know when that happened. But the only reason why I'm standing here tonight is I'm encouraged that light's being shown on some of these issues. And I think as the council continues to change, I think the city of Redondo Beach and the citizens are really going to benefit from some of the visibility that has just been basically buried for years. The city has a structural budget deficit. These salaries are just not sustainable. And for years, they've used the harbor fund to backfill the general fund on this whole internal service fund policy transfer. It started in 2003. Prior to 2003, there was only a couple $100,000 charged to the harbor enterprise. And when I got on the Budget and Finance Commission, I said, why is there no money in the harbor? Follow the money. Well, after 2003 is when they started this whole internal service fund policy. It didn't used to exist. And a while ago at a council meeting, I asked, well, I want to know, show the people the history of this so they can see how it's changed over time. And staff did a good job. They went back in their computer system and got it from about 2006 or 2007 forward, but that missed the boat. By then, it had already been jacked up. So it's not 800,000, or it was almost $2 million a year now that they're pulling out in overhead charges and internal service fund charges. Now there's another whole thing called overhead charges that's creeping in, a whole nother line item. It used to be just internal service fund charges. So anyway, I don't want to take up any more of your time. But you can, as a commission, vote yourselves to put an item on the agenda for discussion. And you can create subcommittees to go off and study things and meet all you want and come back and report to the commission. So if you're only limited to 6 formal meetings, number one, I'd advise the council to extend that. You can front load a whole bunch of meetings at the beginning of the year around budget time and then meet later on, a lighter schedule later on. But I would consider creating subcommittees to study some of these specific issues. That's all I got. Everyone, thank you for your time and good night.
Thank you. Thank you.
I realize it's unusual for a member of the public to address you twice, but with your indulgence, I'd like to give you a little background on 2 items. One is the Performing Arts Center, and the other is this whole idea of internal service funds. And I can give you 2 examples. Back in June, when we're doing the budget, the fire department came forward with a proposal to increase inspections, increase the fees. They put a very nice graphic up on the board showing how the fee would pay for everything else, and it would return $358,000 to the general fund. I pointed out that under Prop 218, it is illegal to charge more for a service fee than the cost of providing the service. So did they lower the fee? No, they came back at the next meeting and claimed that that $385,000 would only partially offset $550,000 in administrative costs that were already imposed on the city by the fire department, its various functions. $550 and $385, that's a $900,000 swing because somebody moved some numbers around on a piece of paper. If you don't think that that breeds suspicion among the tax-paying public, I want to talk to you about some waterfront property in New Mexico. The other one is the Performing Arts Center. And I don't think any of you guys were involved in city government at the time, but back in the early 2000s, there was a $600,000 proposal to redo the Performing Arts Center, which had been the Aviation High School auditorium. And it was going to accomplish 2 things. It was going to bring the bathrooms up to ADA standards, and it was going to add 2 or 3 more ticket windows at the box office, because as a high school stadium, it wasn't originally designed to set up a large number of people walking up at the same time buying tickets to something. That morphed into a $10 million renovation, state of the art, including brand new seats. Well, when the dust cleared, they renovated a lot of stuff, but the old seats got new upholstery. After they'd spent that money, they commissioned a feasibility study, hired an outside consultant for 50 grand or something, to determine the best way to eliminate the deficit drain that the Performing Arts Center was on the city to maximize its revenue potential. And they came back with a wonderful report. They checked performing arts centers all over the state. And they concluded that if you maximized the use of the Performing Arts Center, you booked it for every possible thing, every possible minute of every day, they could turn that $350,000 subsidy loss into a $1.5 million loss. The study confirmed that the cost of promoting it and managing it would exceed any possible combination of revenue sources except one: regular weekend rap concerts. Okay, so that's what we're dealing with here. The financial stewardship of this city has been awful for 5 decades. Hopefully, you guys, with a little help from charter reform and so forth, can make a change in that. But that's what you're dealing with.
Thank you. Any more comments from the public? I'd like to thank the public for their comments tonight. It's been very helpful. Okay, so that has been an excellent discussion, and we do require a motion to receive and file these budget items for discussion.
I so move.
Second.
In favor?
Aye.
Passed. Okay, now we're on to item number 9. So I am going to, we have a number of things that sort of have been dwarfed by the bigger picture of the scope of what the commission might like to do. If we do look at our 2018 calendar and facts, we also need to look at the 2017 calendar, which will tell us that this is our last meeting for 2017.
Chairman, as Commissioner Solomon was mentioning, the City Council adopts each year a continuing ordinance that continues the reduced number of meetings from 12 to 6. They have not yet done that this fiscal year. So until they do that, which is anticipated to happen before January, we do need to have a November meeting and probably a December meeting as well this calendar year in 2017.
Good, that was my recommendation. So I'm also standing by the belief that we have agility in this, and as circumstances change, I realize city government is more rigid than the business life we're used to, but perhaps we're on the verge of changing some of that. So certainly it was to be my recommendation that we would have a November meeting, and that we would, and I think it's in the context of a special meeting. So
Do we have to make a motion for that?
So, and we will.
Actually, because of the non-existence of this continuing ordinance,
Right.
at this point, no, you don't have to. It will
Okay.
simply.
So I think we will do this contemporaneous with the comments of the commissioners. And so here's where into these gray areas where the, sort of order of operation or rules of engagement are not entirely clear to us all the time. So in making the recommendations to the staff, you will flow these up as appropriate to get the meeting scheduled for us?
Sure.
Okay.
And somewhere in your discussion, I also have a proposed date for that November meeting.
Okay.
So.
All right, well, we're anxious to hear that.
It would be the second Thursday of the month.
Right.
However, City Hall is closed that day for the
course.
Veterans Holiday. So we looked at the calendar of when the council chambers were being used by the various commissions, and the one open date is Wednesday, November 15th, if that would work for you.
So a quick look at iPhones and other devices.
It's fine with me.
I won't be able to make it.
I can do that.
Should be fine.
Future Mr. Chairperson.
That'd be important. The first one, too.
Well, no, we're in the same fiscal year. That's interesting. It may still be me, but we'll see.
Yep.
So, with apologies, man, I think, with.
Still be the chair then.
With such a big quorum, we'll accept the date of the 15th. And now, the next issue is setting an agenda for that meeting. So, do we need a motion to propose an agenda, or can we sort of do that in the same manner? We're in a gray area.
I don't think so.
So, again, anybody speak up at any time. I think proposed agenda is to have the city manager meet with the commission and discuss the scope and responsibilities of the commission.
Okay.
Timing of meetings, calendar for commission year 18, and timing of when we get reports relative to when actions actually happen, such that we can raise questions, gather input, and make suggestions in a period in which they can take some effect. And I think that's a full agenda for, that's a big meeting. And you'll brief Joe on the flavor of the concerns that the council person or the commission persons are having. Any other additions or suggestions for that meeting?
Well, we may want to have the opportunity, if anyone wants to revisit the first quarter report, if they have any questions about the first quarter report.
The treasurer did make that offer.
Right. Yeah, and you mentioned December meeting as well.
Yes.
Should we look to scheduling that, or?
I did not look at that.
We can discuss that at the November meeting.
I would like to, just in case the city council does pass their ordinance, and then we're back to 6 meetings. But we'll know that in November.
So when they pass
whether-
their ordinance, it's for the existing year that we're in, or
It's sunsetted
That
on
one
August the
is-
6th.
That one is a fiscal year, or basically a fiscal year.
Okay, so it'd be from July 1st backwards for it.
Yeah, or
Okay.
August.
Well, that's.
I haven't looked at it.
The date that I saw in the resolution was that it sunsetted August 6th
Of 2017, and that sunsetted each year unless or until renewed.
Okay.
It was a cost savings program
Okay.
that was initiated and it was initiated in that way. That was the reason behind it.
Well, with the robust nature of the budget, we can probably afford to open the room for the Budget and Finance Commission to
I don't know who would advise on something
perform
like
their
that.
duties.
The other item that we'll have available for you in November, November 21st, we take our year-end report of the preliminary fiscal year 16-17 numbers. We take that to council the 21st, so we should have it available to present to you. Maybe even a little more preliminary, but on the 15th, we
For
should
the
be able to
fiscal 16, 17?
16, 17, yes.
Getting back to the timing of this council item and possibly limiting our limiting the number of meetings that we can have. If it's not currently on the council agenda, what would the timing be? Could it impact, or would we have an opportunity at the November meeting to provide input back to the council before they acted on that? Or is there a way to communicate with them and let them know that we are desirous of more meetings in this coming year or in this fiscal year?
I do not know. There was a budget response report with the 17-18 budget, so it was done in June then. That budget response report would have been prepared. And it basically said the city manager would direct the city attorney to come back to the city council with that ordinance. And I am not sure where it stands, but I do know it hasn't come to council yet.
So is there a way for
When
us
it's
to
going to
indicate
end.
to them a desire for us, if they go to renew this sunsetted provision? Is it a code section, or is it a municipal code section that changed?
It's got to be, because that's what ordinances do. They modify the
So that would be
municipal
that would
code.
be difficult then for us to go ahead and have the city council modify that, because it would take a change in the code.
But they're passing a continuing resolution. They can modify a resolution before they
But
pass.
it's, they're passing, they're taking and essentially well, I suppose they're passing that particular code section again, which I don't know why they would do that.
Let's ask it a slightly different way. Do we think that that's actually is going to happen before the November 15th meeting?
No.
So I think commission will deliver a robust message to city manager about our consideration of the calendar and our desire to fulfill our role consistent with the charter. And we'll do that in a diplomatic yet concise way. Emphatic, and that we will request that the city manager take whatever steps are necessary to carry that message where appropriate, and to let us know. I think it would be, I don't want to be presumptuous that, if the Budget and Finance Commission is up in arms, they're going to shut us off. But I think, we'll make our feelings clear at that point. And being that there's no action that will happen before then, our other alternative is to draft as was recommended by one of the people speaking, we draft a letter and send it directly. We probably have time left to take it through the proper diplomatic channels of making a recommendation to the city manager, seeking his counsel on our charter, our scope, and our view that we feel we're being frustrated by schedule and timing.
So for clarity, you're still the chair until the end of the year.
You're asking my legal opinion?
You can still be chair-elect.
So
We created a new position.
Let's get whatever clarity we can on that, because if we look at the agenda, what we did was I don't know, we may have immediately we may have elected a new official, effective, hello, city manager, attorney? So, good question. Totally fair question. I don't know. We have, in fact, done that. The question is, what's the effective date?
We'll see if you're in the middle next time.
We'll see.
Yeah.
It's a palace coup.
In any case, I would like to express my appreciation for having been able to do this. It has been my pleasure.
Thank you.
Okay, so, as always, it's a little bit unclear what we need to close out item 9. Because our recommendation for a special meeting and the agenda for that meeting is of, special importance to this commission, I would think it appropriate that we concur on that, and in that light, official or not, I would ask for a motion to approve our request for a special meeting and the agenda as so proposed.
I move.
Second?
Second.
All in favor?
Aye.
Okay, and with that, I would thank everybody, and this meeting is adjourned.
Thank you. Thank you, Marty.
Marnie, I neglected to thank you again. Thank you so much.